So first, what I want to cover, because a lot of you, whether you got studies or not, and you want to implement a new study into your task, so all you have to do is on the top right, there's something called setup. If you click this and you click open shared item, then you take the link that let's say from our studies here. I'll just cancel out for a second. So any of these studies that we've shared with you in the shared task resource where you get a link, you would take this link here, for instance. This is a TPO study, time opportunity. You would close this one, you go to open setup, open shared items, you paste the link in there. I usually click preview. Then what I typically do is I prefix the name with shorty on everything that I basically name. And let's say this one was TPO profile. Then you click import. For me, it already is telling me that I have it. And let's say if I want to override it, I would say, okay, for you guys, you would not have it. And now it says this one's been imported. Then you click on the little settings here button on the studies, right? And you click on it. If I type in shorty and I type in TPO profile, there it is. If I want to add it to this screen, I just basically do that right now, and it's added on this screen itself. It's pretty straightforward. So open setups, you copy the link, you paste it, and then you load it via the studies here. You type the name that you gave it, and then you double click to bring it over here, and boom, you have it. Does that help?
Yeah, it's pretty straightforward.
Yep. So then some of you have the full send, you have the Elliott waves, but all of you have the orbs, the trend bar, the pivots, right? And then you have the targets, right? So just now I added this TPO, which kind of helps you tremendously on Thursday's trades. So what I want to do is just simplify. A lot of you guys you want to learn everything, but you don't want to take the baby steps, right? You first have to understand the baby steps, get your confidence, and maybe baby steps is all you need. Maybe you don't need more. Maybe you can, like literally using orbs, you can make a lot of money and never really have to do it again. So I'm going to go through a couple of trades and give you guys the ideas and clues how you could have traded this on Thursday, but you guys also have to take time and spend it and know basically to replicate, not what I'm doing, but to replicate the patterns, to look for it, replicate your entries based on 3 Confluence or more points. So that way, when you're entering trades, you don't need shorty, you don't need Earth, because all Earth does as well is using the orbs. He's using orbs really well for the contracts. And he, as you guys know, he scalps $1 contracts all day. So me and him are actually not similar traders. He's a scalper. I'm more of a day trader. I have a plan based on the levels and this and that, and I'll get in. But if I see that it's bouncing off a level that's critical to me, most likely that I will get in probably at the same time because we might be seeing the same picture. Hopefully that makes sense. But he's more of a scalper, and he does day trade as well once he has profit, which is the right way to do it. But this is just how I do it. So when we talk about Confluence points, does anyone know exactly what I'm referring to?
I remember this. It's been a while since I've studied though. It was like it's like points that add up over time based on like certain indicators, right? Like so the higher highs, the higher lows, right? Am I close?
Close, but let's cover it. So the indicators that we have all in one package is your trend bar, 2 is your pivots, 3 is your orbs and levels. So orbs and levels are the green ones, and then the bottom is the negative orbs. And then you have trend lines and patterns, right? And then 5, as you get more advanced, you get the POCs and VPOCs, and in this case I have TPO. And then 6, you will have, if you have it, is the arrows and the full send. So it's going to probably look, okay, well, not that bad in toss, I guess. I was expecting it to be worse. So any combination of the 3 points right here, you can use as an entry for your play. And and then based on where you're getting it, your next orb or next fib becomes your next target, and the previous fib becomes your stop loss. All right, so let's take a look, right? And I do suggest until you get more comfortable. So here's your 10 o'clock right here. If you look at it, this was your 10 o'clock candle. You really should not be trading till the fibs are established because it will make your life easier. If you're new and you haven't traded before, the first 30 minutes are the market sentiment. They tell you how the market's going to do the rest of the day. And would you guys agree, like based on looking at this, look, the first 30 minutes, what did they do? Well, they pump it, they caught more shorts, and, more bulls in the trap, and then boom, look, they dumped it all the way, and they just kept making lower high, lower high, lower lows, lower lows. Here's a new low, new low. So it's basically a trending day. If you guys look through the, the guides and trading, this is a trending day down. And usually what you want to do on trending days, if it's bullish, you want to rip the bull flags. If it's bearish, you want to play the bear flags. So right off the bat, you're waiting 30 minutes and here comes the first entry. And your first entry would be here. And I want to see why you guys think this is an excellent entry here. What do you guys see here? I'm on 3 minutes.
Bear flag.
You see a perfect bear flag that's running into the orb low from the bottom and your daily pivots, right? So what I have in terms of, and I'm on SPX, if I was to put the VWAP would be somewhere around here as well. But let's for now just stay on SPX for a moment. So here's my orb low daily pivot. So I already have 2 points. The trend bar is my third point. And then if I use this guy, like we said, sorry, let me just zoom out. If I use this guy here, if I use this trend line here as an entry, that is my almost 5th point of Confluence to take this trade short. Do you guys see that? So we had the orb and daily pivot and it's a rejection. I know I added a TPO, for the purposes of showing you, but TPO is really, really powerful. For instance, you see here, like it never crossed this TPO area. Look how well it rejected. It almost worked perfect. And here almost created a double top. If you didn't read the Dale book that I've given you multiple times and told you to go ahead and read it, what does Dale book say here to do? I don't know if Dumpster is on, but he read the whole book. So this is your entry to go short, guys, every single time. You have multiple confluences where it comes in, and I'm 100%, let me see, guarantee you that, let's check SPY, the VWAP's there. My talk's super slow lately. All right, well, same concept, right? Here comes the retest. And what is going on? Do you guys see where we rejected now?
Yep.
Orb low, daily pivot, and VWAP. This is a trade that you want to take, guys. We are risk managers first. Second, we are profit managers. I don't care what you learned before. You do not control, nor do I control where this is going to go, up or down. What you can do is you enter the rejection here. You put your stop loss maybe right above here, and don't play 0 DT if you're not familiar. Play next week's, so you don't get clapped with the theta. So look, let's say this one here. Maybe I would probably do a little bit of less. Let's say stop loss is here. So what is my risk here? Does anyone know? I want you to calculate your risk.
Isn't that like 40 cents?
It's very close to 40 cents. Well, let's take it 40 cents, 41 cents. It's the difference between here, between your entry and your stop loss. If you don't have a stop loss and you're not using it, then you really need to reconsider what you're doing in your trading life. Guys, we are I'll call it market gamblers with an edge. If you see it's not working out for you, you get out. You don't stay. You do not average down. You do not. I want that rule to be your number one. You do not average down on 0 DTEs or weeklies. I hope that you can engrave this in your brain and live by it. Do not ever average down on weeklies or 0 DTEs. Hopefully, I can be more clear than that. Do not do it. You will regret it. You will get caught with oversized position. I guarantee you in your life, you're going to be like, fuck, I messed up. Shorty was talking about this
Yep.
Nonstop. Do not.
I did that Friday, and I learned my lesson.
It is the toughest thing to get out of, guys. It's the biggest. So if you guys read Beyond Greed and Fear, the book that I recommended to you guys, you will understand all of these financial psychology behind it. Is a lot of people have a gambler's fallacy, and they believe, when you go to Vegas, I don't know if anyone's been in Vegas, I don't know your age, but your first night in Vegas, how does it usually go if you've been?
You usually win.
You usually win, man, and you're all happy, and what happens next?
You usually cry at the buffet bar.
You usually cry, and that's the honest truth. So, and I don't know, how old was I? 20 something, let's call it. One of my friends was getting married, and he's like, we're going to Vegas 3 days. I was like, dude, Vegas 3 days, man, we need to cut it down to 2 days. You land, sleep, and you leave. My advice to the younger one, do not say 3 days. 2 days is amazing. You land, you lose money, you sleep, and you leave. The best thing you can do. Okay? Well, we stayed 3 days. And if you don't know, the White Castle burgers were like maybe 50 cents, 40 cents. That's literally what we ate for the whole day. We were broke as a joke, like all of us. I think we were upside down like 12 to 15 grand each.
Wow.
And then you got to tell your, whether your girlfriend, your wife, or whoever. I'm like, oh yeah, it was a fun trip. I lost 15 grand in 24 hours. And what did you get out of it? Probably nothing, right? And some people don't learn. And same here, gambler's fallacy. Oh, you nailed one right out of the gate. Oh, in the morning I got calls, man. I'm cocky and overconfident. Now it makes a new high. The constant trap that happens in the morning, and you guys know this by now, they set the high. What they typically do is they dip it and they come here and then whoop. They do this literally. I see it in the mornings, and I tell you guys, be afraid of this. They do this probably 9 out of 10 days. If you read my guide on the type of trading days that we have, how many times is a typical trending day? Oh, I'm sorry, trending day. How many times does it occur?
Maybe once a week.
If even. Maybe twice a month. Right? It's in market makers' goals to keep the price action as congested as possible, because like Friday or Thursday, I'm sorry, what happened to the premiums till 3:45? Like I mentioned in the morning, do not trade till 3:45. What happened to the premiums?
They were just the theta decay. It was just decaying.
Yeah, you could not trade it, guys. It didn't matter if it was making your move, they were just killing it. You had to be quick, taking 10-20% profits, which are good, on every trade that you could get. And yeah, were there some setups that you could have taken? Oh yeah, definitely. But people were hoping for bounces that were significant, and there were really not strong bounces till this one here. Okay, so I just want to make sure the psychology of this, guys, is fairly simple. We enter here short, for instance, right? You entered here short. So let's say we had the VWAP rejection, you had the previous high rejection here. So if you look at this rejections here, so you have 3 wicks hitting a level, right? 442.23. I am pretty sure we had the POC in this area too. I don't have it marked because I deleted all the drawings, but I'm pretty certain there was a POC in this level. I know because I remember it. Okay, so same concept here, guys. Look, bear flag. If you don't know what a bear flag pattern is, here's your bear flag pattern. And this is, and I told you guys in the morning, play bear flags all day today. Does anyone recall me saying that? This was a bear flag all day, every day on Thursday. All the pumps were sold, every single one. And then there's a mini bear flag here. There's a mini one, maybe bear pennant. There's another one. This one broke to the upside. And look, you take that and you play it. Another bear flag here. And you play it. This one here. Do you guys see the simplicity now that you're dealing with? You know it's a trending day. You're gonna get sold. And every single one of these you could have taken for an entry and drive it down. And look at the targets. Tell me that any of the fib targets missed. You get in here, next fib you get out. So you would have gotten in at 440.86 and 439.79. You get out. I mean, guys, this is a hell of a move. Almost a dollar move on SPY is gonna pay. Here again, let's say you get out and you're waiting for the new higher high to be made, maybe here, because you guys know that I don't prefer to risk. If this is the top of the line where the higher high was made, in this case here, right? You don't need to take this risk right here. This is not a risk you need. This area here is potential for rejection, and you want to see it go over it and then come back. So if I was to switch to regular candles, pay attention to this area right now. What do you guys see happen here? It broke this level. Did it break it? And what happened then?
It retested and took off.
Guys, it's going to do this 95% of the time. And when people tell you be patient, they're not telling you to be patient and clueless. They're telling you be patient and wait for this retest. And look here. You grab this one here at 440.26 to 441.82. You guys know that I would be trimming on the first Feb here, and I would probably be all out on 0 DTs close to the VWAP. I don't wait till it hits. I sell into the strength. Okay? You never wait till it hits your resistance level, because what happens to your bid and ask when it does hit? It
doesn't
you cannot get a limit order in because it just fluctuates so much. You want to sell it on this candle right here, put a ask a little bit higher. I promise you get filled. But once it hits, like daily pivot, oh man, you're screwed because you're not going to be able to get out. And I mean, if you just watch one ticker in the morning and you do this, I guarantee you, and you're patient and disciplined, you will make money in this market. It's a fairly simple strategy. Forget everything you know. You have the orbs and you have confluence points. Here's your first one. You guys see the little red arrow that showed up multiple times. These are automatic, guys. I do not draw these after the fact. They show up. Here's this one here. You had an arrow, break of trend bar, and you're like, man, I'm not going to take this because the orb 50 is there. All right, perfect. Then you wait for the orb 50 to get in. So let's say you got in at 443.2, okay, which would be good. You get in here or on the retest of this one, which would be around 10 o'clock. It comes to the trend bar and your VWAP very close to the 50%. Don't treat these as a single line of point of resistance. Put a little cloud like this if you don't trust it around it. And if not, I can code it for you where you have a little cloud around it, so that way you treat it as a resistance. Never treat a resistance line, oh my God, it has to tap it perfectly. We're not perfectionists, right? Do our levels hit a lot of times on VPOCs and POCs, you know, on $1,400 points to a penny? Yeah, sure it does, and it feels good. But you know, in the term, there's no perfect trade. You do not wait for the perfect trade.
Shorty, I have a question.
Yep.
The MA9. How do you like that?
Which one? Sorry, EMA.
The MA9, yeah, because
Yeah.
I'm looking at also when like every time it breaks over, it's puts. Every time it breaks, let me see. Yeah, every time it breaks over, it's calls. Every time it breaks under, it's puts, and it never fails.
No, I've given you guys a strategy, and we can talk about it again because there's new people. I've given you guys a very, very simple strategy before. Does anyone know what it was?
So when the 9 EMA crosses up or down through VWAP.
Exactly, guys. So, I mean, I'll explain to you how it works, and then you guys are welcome to take it or not, or add it as another confluence point. Guys, as long as I'm not telling you delete everything you know from your life, I'm telling you look for confluence points. If you just trade off of arrows alone, no, it's not going to work. If you just trade off of whatever you're doing, VWAP, eventually you're going to get caught. But the more confluence points I have, guys, the more I trust the system. On Monday, just do me a favor. Forget everything you know. Pick SPY and play what I'm teaching you right now. If you're red, send me your last account. I'll refund your account. I'll send you my money. There's no way you will be red when you get 3 confluence points. No freaking way. So let me show you this. I'll go back in time. Let's see.
I love that
So,
9 EMA strategy you taught us, Shorty.
Oh, dude, it is guys. I used this when I first started trading, and I'm telling you this.
It's so simple.
I use this because it made my account grow, guys. I promise you, the way trading works, you start with 1,000. Once you hit the 100K in your account, from 100K to a milli, you can expect 3 months movement, and you're there. And I know it's hard to believe. You're like, man, you're fucking crazy. No, trust me. The first 100K is the hardest 100K you'll ever make. Once you have it, from 100K to a milli, with the same discipline, very easy. But you adapt and you learn. And you guys see me, I go on vacations, I'm always learning. I want to learn something new. I want to make sure I'm relevant to the market and I'm relevant to what they're doing. Okay. Same concept in trading. So I just want to go back in a day. I guess what day is this? So this is Thursday, Wednesday, right? This is Wednesday. Okay, so Tuesday. So look at Tuesday, guys. Fairly simple as well. So the strategy of 9 EMA and VWAP, and I want you to pay attention to this, and you can change your rules as you like. When the 9 EMA, the blue line, goes above your VWAP, and this VWAP cloud is your gold, believe it or not, you can go use the regular VWAP. I promise you will come back to liking this one a little bit more because the standard deviations are part of the clouds. If you go add the regular VMA, VWAP, I'll just do it for a second. Here's this one. So here's your regular VWAP. You guys see it? The purple line is there, right? But here's your bands, the standard deviation. You guys see this one here? And you can keep this if you want. You see the standard deviation of 20 is respected here. The bottom line here is also respected. If you want it, you can keep it. Just don't get paralysis from analysis. The reason why I have these and the way I created the strategy that I use is I try to simplify it so I don't have too many things. It's just 5 confluence points, and if 3 hit, I'm in. For now, I'm just going to remove it because I don't use that. Okay, so let's just look at it here. Here's your 9 EMA here. Watch this now. You want to be a day trader? You get in when the second candle closes below the 9 EMA and the VWAP. So here's the first one that broke it, right? You guys see this one here? You would get in on this one, and your stop loss is the top of the VWAP cloud. Or in this case, what would be a better stop loss? I just want to make sure you guys are following. Wouldn't this red dot be a better 50% be better stop loss than the previous? Because here, you have room, but why not add this as a potential confluence point that they can't reject it over here? And look what they did. They created a trap and then came down. Are you guys following? Am I talking too much?
It's funny because I took that trade.
Okay, there. You didn't, you learned somewhere. Okay. Then you guys know I am very big on naked trading. I don't know if you guys know that, but I've studied it a lot. And for new guys, I higher high plus higher low. All you have to remember is bullish trend. Lower high plus lower low is bearish. Any other combo, I'm talking about any other combo that you can get, whether it's higher high plus lower low, it's consolidation. Look here, lower high but lower lows. So this is very bearish right here, and on the 3 minutes, right? You have a higher high, here comes a lower high, lower low. This was your level pretty much for shorting, right? Because this is your new lower low. Once you take this out, lower low, you're usually going to come back to this point to retest it. And you guys know that I started talking to you guys about smart money and orders. Here's an indecision candle. Is there right here? You guys see it? I just grabbed the top and the bottom of this indecision candle here. This one here is also good because a big move came right afterwards. So let's say, Shorty, how do you know which one? Does anyone wonder how?
Yes, how?
Okay, so think of it this way. There's big money, right? Me and you, so in terms of scale, think of this big circle as the institutions. This is them. Me, you, and everyone else is here. We'll make a different color. Okay, I don't know why. This is us. Do you guys see this? Us, them. You do not control price, you control your risk. Till you become this, you don't control this. Does that make sense? You guys
Yeah.
see it in the market every day. There's one guy that he tweets and he can move a stock and the volume from pennies to billions. Elon Musk.
That's crazy.
Because he has $200 billion and he can put $42 billion offer on a company. Me and you cannot. We don't have the resources to do that. So when you know this and you put this in your head, we are risk managers first. Please, and the sooner you pick this up, I promise your trading is going to go, you're going to go from red to green every single day. As soon as you literally put it on your wall, like I have it, put it on your wall above risk manager. And every morning you sit down, just tap it and know and look at it that you are a risk manager. You're not a profit manager. You have no idea what to do with profits, but you should know what to do with the risk. I promise you, I can't even explain how important it is. You do that, you're going to start seeing green trades every day. And if you read Trading in the Zone, people that know this and how to trade it, and I know you guys think right now, oh, Shorty, it's so easy after you do it. You know, the fact that they happened. my thought process does not change when it's happening live either. And you guys probably know that. I see what they're going to do, and I know where I'm getting in before they get in. Once I see the trend that they're doing, I'm able to predict. And I'm not saying predict the moves, but I predict option A and option B. If you want to go option B, that's okay. I'll go with you. You want to go option A, that's okay. I'll go with you. But I'm not here just entering a trade because I'm fucking entering a trade. And I will never enter a trade if I'm not in a stop loss. If I don't have a defined risk, it doesn't matter who you are. Your account goes to zero very, very soon. And if you have a risk, let's go through this again, higher high, lower high. So far, you guys following. Then you have, so let's say this was let's say higher low, for instance, here. I'm not going to do this because it'll mess me up. But here, let's compare to this one. This is a high low. This becomes your trend change. It's called change of character in smart money. We know once you break this level here, that you're going to be looking to come back, and you're going to come back and retest this level because there was a big order here waiting to happen. So let me kind of switch here. Let me go in 5 minutes for a second. Newer guys, definitely use 5 minutes at first, and then we'll go from there. So watch this. Where do you guys see the bottom? You guys see the black bars, my volumes on this screen, because I just made them. Let me know if you guys can't see it. I can change it. So if you look at this chart here, where do you say the volume came in on the chart? If you look at this candle, which candle, downside candle interests you? Just point it out. Is this candle of any interest? It's the biggest candle so far. Before that, you had a little bit of an indecision candle here and a little bit of not much here. But here you had a decent, I would call it reverse hammer or inverse hammer candle or pin bar here. So let's say you're like learning, and this is where you practice and you chart to figure it out. If you look for candles that are big size, that means a big order entered, meaning a big boy entered the market right now. Okay, he's in the market and he's ready to go. Well, let's say for now, I'm just going to use this candle here that's pointing right there, the green one. I'm using the green candle right here. Let's see. Where are you? Why is it not switching? Okay, maybe not. Okay, so I'm using this big green candle here, and I just drew a box top to bottom, and look what happens, because this is a big order that came in on the volume and the candle size itself. So you can switch to different time frames, multi-time frame analysis. You can find if this is true or not. Well, we were using 5 minutes, and that's the biggest candle we got. Before that, we had an indecision. We also had the arrows, which are outer ways. And now we're like, okay, well, when you come to this level, I will short it. I will short this. And where would you put stop loss if you're
Maybe at the top of that the big red candle.
Yeah, it's big. You can put it right here. Like right here would be good. What I do is I put it a little bit higher. And why do you guys think I put it a little higher?
Stop loss rate or whatever they call it.
They do stop loss hunting.
Hunting, that's right.
So if I put it right here, I guarantee you they're gonna stop me out. But you guys see this little line that's created on this candle? Usually I will use this if I'm scalping. This becomes my automatic stop loss. You break this, you're gonna go higher. Okay? So here, if you look at it, on any of these lines, it was not able to break this at all. So let's say you get in on this right here. You're getting in. You have the 9 EMA crossing below the VWAP. Here's the first candle. Second candle, you're in. Because, I mean, it went below this low here. You guys see it, right? So this is a simple strategy. Now you have another confluence point to the orbs. Okay, so where do we go? How do we know the targets? This is my orb low. If I took it on the 50%, which is your 50% orb right here, and you have your VWAP, this is a place to get out, right? Your first fib from the entry, up or down, is your first target. So if you got in, let's say you got in here, which is 443.57, you went all the way down to 442.37, guys. You guys don't think this is plenty to make money? Dollar on a SPY?
Yep.
Oh, believe me, this is over 100% move here. This little guy right here. You get out right there, and what can you do again? It's fairly simple. If you want to learn the strategy the way I did it, here's your attempt. You guys see that it didn't break it here? Well, this is a candle you get in. Your first trim, again, would be here. Your stop loss, you can put it at the 50%, give it a little bit higher, and look at this. It just keeps going. And then, if you want to use EMA as your stop loss, but you also have trend bars, if you want to use EMA stop loss, first candle on 3 minutes that closes above it, you get out, which is right here. And then, if you want to play it again forward, well, you just have to use your art skills. What is this right here?
Bear
Not
flag.
an ascending. Yeah, bear flag. It's not. Yeah, it's not an ascending triangle. It's a bear flag. And look here, your bear flags, you can get them on the top, or you can get them on the break on the bottom. And then again, you use what we have. You have the fibs. Here's your first fib right here, your second fib, third fib, fourth fib. That any of the levels miss on your exits. Just look at them. You got in here, you trim here, and you get a bounce. You get out, but look at the trend bar. And if you don't believe me, guys, the trend bar and the power of trend bar in you staying in a trade, ask Earth. You guys see him using it religiously. When I met Earth, oh man, the guy was not very good at what he did at that time. And then all of a sudden, he's like, hey man, I'm using this for options. And I'm like, oh, okay, cool. I never paid attention to it that much. And he's like, yeah, man, I make a killing just charting options off of the orbs. And you guys see him every day, kind of like a clock. Oh yeah, I hit
Sure,
this,
yeah.
I'm in.
Shorty, I have a question.
Mm-hmm.
Okay, so when the bear flag, the top of the bear flag, okay, you started it up there because that was the beginning of the downtrend.
Well, it's the break of the low. You guys see here that this was our previous resistance or support. So right here is a major support. So if you're going to go below a major support becomes what? Major resistance.
Yes.
So you just basically are flipping here. I know this was a critical level for it, right? So for me, I draw a line here and it becomes automatic. And look at this pin bar that comes from it. They trapped people that were going to go over this resistance.
Mm-hmm.
I mean, your entry, professional entry is right here. Right here is your entry, and your stop loss would be somewhere around here. And look, ever since then, you're going. And then if you measure, I promise, if you measure from here to here, negative 0.76.
Okay, so the next top of the next flag would be right there. Exactly. Yeah. Right at the end of the bottom of the first bearish flag,
Yep,
correct? That would be
that's
the
correct.
top. That would be the top of the second bearish flag.
This one right here.
The one right where you got your pointer, right going up. Yeah, right over to the right a little bit.
Yep.
That
So
would be
this
the top. That would be the top again of the next flag, correct?
exactly. That's correct. So
Okay.
you measure
Okay.
this move. So I just measured this move to here, and this move was telling me to get out here.
Yeah.
Now look at that.
Yep.
And it's fairly simple, guys. I mean, it's just patience. It's literally stay there and wait. Don't force
Yeah.
a trade. Use the levels, and we're going to get it. And
We
look,
do.
multiple times. And here's another mini bear flag. And then you had another bear flag here. As you get closer to the day, you want to avoid, So look, here's my previous lower low, this candle right here. I put that guy, and look what happens. It's not able to make a new higher low. It rejects, broke it. And guys, on SPX or SPY, if you're able to catch these two big candles, I will bet my life it's over 40%. These two candles right here. And again,
Now,
yep, go ahead.
now, when you're doing the fib, okay, so you did the fib on the Fibonacci retracement on the first flag from the bottom to the top, okay. Then do you use those same levels to go when you're tracing the second flag, or do you go again and use it again from the bottom of the second flag, or the third, or the fourth?
So the levels that you have, these Fibonacci's here, right, the top and the bottom, they're active for the day. Okay. So it
I
doesn't
got you.
matter what pattern you're playing here. These levels are active for the day. So for instance, does anyone see any other pattern here on this day on Thursday? Anyone?
No.
I'm going to give you guys, everybody, a couple of minutes to catch on. What other patterns do you guys see? And I will give you a life-making pattern. And if every time you see it, you take it, you can make money. But you have to practice the charts. I'll teach you right now. Here's your A. Here's your B. And then what's this here? Look at this. A, B, C, D.
Mm-hmm.
The measure between this one and this one is the target between this right here and this right here. So let's just measure for a second.
Mm-hmm.
So right here, if you measure this, it's the same length is going to be between the two. I guarantee you. Or very close. If it's off by a couple of percentages, you can't say, oh my God, you missed it. No.
Yeah.
Okay, so this is 0.99%. Let's call it 0.95. You guys see it? Negative 0.95.
Yeah.
From here to here, what is it? Negative 64. And where did it end?
Mm-hmm.
Guys, do you guys see where it ended? From here to here,
Yeah.
it literally ended the day at 350 at the same level of the ABCD pattern.
Yeah.
So if I was to do this, let me just delete this for a second. And I know I'm throwing a lot. We'll go back and revisit, but the questions are good. The more you ask, the better. So watch this now. Which fibs do I care about? So you guys know I only care about 50, 61.8, 1272, and 1618. These two are my main targets, 1272 and 1618. Okay, well, let's kind of look at it, right? So the rejection of 61.8, it looks so easy right now, and I feel bad because people are like, yes, you're doing it post, after it happened. But if I draw this, right, if I draw to find the next resistance, look where it's heading. You guys see that? It's hitting a major 61.8, guys. Like 61.8 is so important on the retracements that it's crucial. It's literally crucial to take shorts there when you see it. So look, 61.8 broke, which is also a bear flag. Look at the levels. I would say this is pretty spot on 1272. And then look, all of your levels got hit. Once it comes to this level, you get out or scale, And then here you come back to a daily pivot orb low and 61.8 approaching in your VWAP. I mean, this right here is them saying, hey guys, here's some free money. If this wasn't free money on a bear flag, if you were not confident, this is them saying, okay guys, here's some free money right now. 441 all the way down to 437. So from 2 o'clock, I guarantee you could have made some killing on these contracts here.
Okay, and that's because the day was a downtrend day all the way.
Yeah, this was a trending down day. I mean, well, after it broke this flag, it was telling you we're going further down. And then, I mean,
Okay.
it never made a single, it made a higher high, here. So if you think about it, right? So here's your line. It made a this, it did this. I'm just drawing the levels right now, or structure. And then you see that it came to this structure here, and you can tell this was the peak. And look how well it came back to reject it. You guys see how it went, came back to that level, to a penny, and rejected it. And then if you're not confident in these levels and sniping, then sure, find the previous higher low, or lower high, I'm sorry, and then look for a retest. And look at this.
You make sure you go to the higher highs in
Exactly.
the peak.
And look at this.
Now, I hope I'm not asking too many questions, man, but I really need to, I want to get this really down, and I'm sure.
No, guys, I'm here as your encyclopedia to ask me questions. If you
Awesome.
don't, I'm worried.
Okay, so let's say that this day started out down, but then all of a sudden it turned around and went up, which we've seen thousands of times. Then you would do the same thing. Instead of doing the bearish, then you would do the
bull flags.
The bull flags, right?
Pretty much, yep. All day.
Now,
watch this now for a second. I took
Okay.
off everything on the chart, right? Not a single indicator.
Okay.
You guys agree?
Yeah.
Okay, so here's my higher high right here. Here's my lower high right here. Agree? Here's my lower low, or let's call it higher low for now. Okay, so every time you have this, right, you're going here, you come back. So this is a critical low here. This point here is going to be critical for shorting. Every time you break this, and this is the move you're waiting for. You're waiting for the retest of this previous, call it higher low or lower low on this scale, whatever you want to call it. You're waiting for this retest here. And look how well it worked. I took everything off my charts. Watch this. Here's your bear flag. Same concept, right? You draw the top to the bottom. Your fibs are on point, and simplicity is right there. Just the structure of the market's telling you you're making lower lows, your lower low, lower low. Then you're not able to hear, if this one went over this high, previous lower high, if this one went here, then you're like, okay, well, maybe we have a range day. You guys know the range days are this. They stay. So this is our initial balance high. This is our initial balance low, right? So if initial balance high is broken, we can expect the bulls called initiative buyers to buy it and go higher. When you have a trending day, you would usually find initiative sellers to break through the initial balance low, which is set right here. So you would have the opportunity to hear. Here you guys see, yes, they made a new higher. They made a new higher high on 5 minutes, right? You see it here, but look at how quickly the trap came. Well, let me just kind of draw this out. I'm grabbing this indecision candle here because what followed after that was a big red candle, right? Yeah. Well, what do you know happened here? Let's just take a look. Did it hit perfectly?
Sure did.
It hit on the penny, guys. There was an indecision where they trapped the bulls. But look at the big red candle. What did I say? How do you find the block order? And I did all of this to get you to the block order. How do you know which one to pick? Where did the red candle come? Oh, the big money entered the market. They're like, hey, I'm tired of you guys, indecision. Here's my sell. But what that means if this guy was able to fill his orders here, there's a
Yeah.
guy that did not fill the orders, and what's going to come back is called the liquidity sweep. This right here is called liquidity sweeps. Like when they have it in a range like this, like you guys see the tightness here, they come in, they play, they picked up more shares here, but then there's another seller waiting here because he was not able to get filled on this.
Mm.
And whoop, a sell-off.
Wow.
And it's just simple, guys. All you have to do is literally wait. It was just patiently waiting game. And that's what everybody tells you. If you watch any videos, any books, it's 80% patience, literally 80%. The big red candle, this is your point of interest right here. When you see a big red candle like this, find an indecision candle right before it. I mean, it does not get better than this one, guys. And look, boom, it happened. We can look at something somewhere else. Let's see. So
Shorty.
this here is a double distribution day. You guys see it. This is your double distribution.
Mhm.
You had two, and then it continued down. It didn't find value higher. So you have to spend some time with the market to know. And then what is this here? Same concept, guys. It just happens nonstop, literally.
Shorty, if like I was asking you, if the day decides, okay, that it's gonna turn around and go bullish, so then the points on the fibs, they change, don't they? Because now, or don't they?
No, the fibs are irrelevant of the price action.
Okay, so whether it's up or down, once you make those fibs lines, whether it goes down or up, those fibs are still going to be the same.
Yeah. So the fibs, the way these fibs are calculated, are based on the first 30 minutes. So here's your 9:35, and this would be your, I guess, right here would be your last candle. So if let's say, let me just remove all of this.
So even if it goes bullish, you're still going to
It
have.
doesn't matter. Yeah, we still use the same. So here, this would be our low.
That's good to know.
You're gonna use the fibs here, right? And I'm gonna use the high. And here come the fibs, right? So if I add these studies right now, kind of back into it. Well, they're covering. You guys see the dotted line here, the 443. What is it? What is this line right here?
50%.
It's 50%. I'll just remove it. Just pay attention. I'll remove the. Look, guys, is it 50%? Magic, right? Wow. I just grabbed the top, the bottom, and I drew it, and it drew the levels for me. You do not change the levels for the day. So think about it. Back in the day, there was no computers. There were slips on the trading floor. A guy would be jumping up and down the first 30 minutes, and that's how people knew on the trading floor. If you see people that are, running around, freaking around, trying to get the sell orders in, they figure out that it's going to be a trending day lower, and they would literally look at the charts and short anything below the orb low. And that's literally my strategy and my concept. The idea was based on the trading floors and setting the 30 minutes to settle the news, and they tell you what they want to do. And I mean, here they were telling us all day what they wanted to do. So does everybody understand the 9 EMA and VWAP, or did I go too quickly? I'm okay if I go back.
Is it when the 9 EMA crosses the VWAP, or is it when your first candle closes?
No, when the 9 EMA, you want the 9 EMA to cross below the VWAP, right? You can use that. If that already happened, for instance, it happened before market like it did here, then you use the 5 minutes candle close below that, right? So like this candle here is a master candle, as we talked about. You really should not short it in between, because all of these candles right here, every single one of these is called inside candle, right? So, you would only short it once it breaks this level right here, this bottom of this master candle. And you can see how well that would have paid you as well. So on 9 EMA, sure, you would get in on the 5-minute candle that's below. So first candle, here's your second candle. You would get in on a second candle that starts below the 9 EMA. So this was your entry here. You get in here and you can ride the trend bar all day. Look at this. Does a single candle go above the trend bar?
Yeah, it's very simple, man. It really is.
And boom, you get out here and you're good. Then you wait for another retest. We know this was a great retest because just the simplicity of what we know of the big orders. And here comes a test, perfect test. And you have, if you think about it, you have what? You have the daily pivot, you have the orb low, you have the VWAP. I mean, you have so many confluence points. If somebody checks, I am 100% sure that there's a POC in this area. Like I could bet my life that there was one around here.
That's always keeping in mind that when it's coming to a POC, it's always gonna try to retest, or it's always gonna be there's a chance that it could retest there, right?
That's correct. So those are called in the book with Dale. There's something called strong high and weak high, right? When a stock hits a certain level, for instance, this one right here, right now, post action, we see that this was a strong high, meaning you hit it and it literally went down.
Yeah.
When something hits like a weak high, it basically would hit it. Let's say it hits it again. It goes here and then it doesn't do this. It just goes down a little bit, comes back, does this, and it's consolidating right before the demand supply zone. Those usually tend to break out. If you guys notice the price action, those usually break out above because they're consolidating right below it. They're gaining power. So think about it. They're pumping right underneath so to ready to take out. They're squeezing the shorts really, really hard here. But then, here you have another opportunity, right? So you had a lower high here. Well, this is the opportunity that you're waiting for based on what we know, what the learnings. You have a couple of points that you want to look for rejection, daily pivot, your VWAP. Then we had the smart money enter the market at this level. They did not get filled. All of those things play a role. And then when you combine it, and you're not going to do it in a month, guys. I'm sorry, but if everybody could do trading in a month, we would not have any lawyers, doctors, any professionals that make money, serious money. They would not have it because everybody would be trading. And you cannot learn trading in a month. I mean, if you want to believe it, sure, but you're not going to do it.
Nope.
Okay. So then, does this make sense? I want everybody to make sense here. Does this make sense, guys, on a call? If you're new, just say yes, no. I'm okay to repeat this all over again until you guys pick it up.
That makes sense. Total sense.
Yeah, it's making.
Okay. So Monday, all I'm asking you is to use the trend lines and the orbs levels. The way I just described you an easiest way to make money on this, guys. A fairly easy way is use your orbs. So let me use this. Use the orbs. I'll just go hide this previous day one for a second. I just want to see today so that I don't see a bunch of lines. Okay.
Shorty, what do you have your VWAP settings at?
They're posted in our shared task resources. They're the same.
Okay.
I gave you guys the study in the shared task resource.
Okay.
And it's the same one in TradingView. We basically have the same stuff in TradingView. Okay. Now I want to add a little bit. Some of you guys, have the full send. You got it from me. Some of you didn't, which is okay. You don't need it. If you don't want it, you don't need it. You can use it multiple ways, right? So usually what I like to use, I use 5 days, 10 minutes. I use 5 days, 5 minutes. And it's pretty much anything that's below 15 minutes, I use 5 days. And, if it's less, like one day, 1 minute, I use it just to see the action of that day. So I want to see how it's comparing. I don't care looking back on 1 minute too much. That's why you have higher time frames. But then if you start flipping like through different time frames, you're able to tell, where is full send showing up. And SMC, if you guys talk to her, she swears by it, and you're able to find the full send on the charts, whether it's the daily. If you're finding something on the daily level, for instance, on full send, like this one here, it worked out pretty well, I would say. Most people, the way you can play it is you can get in on the break of the candle high, which would be 442, and that all went all the way to 455. So not too bad, right? I mean, that's 13 points on the full send. And these show up a lot, guys. Like on certain stocks that are beat down, there's probabilities involved as well. So let me remove this off of this guy. So here's our bearish full send that showed up. So you have the full send here, and we also have an arrow that showed up on the daily. And not because it's, you know, the logic that I use and it's the arrows, but these are pretty freaking accurate. Whenever this shows up on the arrow, it's not a bad time to go up or down, especially on the daily. You want to buy contracts that are 4 to 6 weeks out. If you're in the 4 hours and you're seeing stuff like this, same concept. You want to buy time, the higher the time frame. If you switch to 5 minutes, for instance, and you're seeing bullish and bearish sends, you can actually play it as it shows up, or you wait for the candle to show you the close right below it. So for instance, here, you guys see that there's an indecision candle on 8:30 market. So for us at open, this was a good short level. 14,203 breaks, you can short it based on the full send. And if I short it based on the full send here, I'll just put the stop loss right above this candle, and that can be my stop loss for getting out. So here it came back and it never really looked back based off the full send. And these, if the full send is showing on the top, that means it's a bearish. It's telling you full send to the downside, okay? If the full send shows up on the bottom of price action, so for instance, let's find one where we will probably find one on crude oil. So there's a couple there. I'll just go on 65 minutes. That's my favorite sometimes to chart. So nothing here. There's a lot of bearish divergences. Okay. So here's our full. So here's the full send on 15 minutes, which gives you a little bit more confidence, right? So if you look at it, it's appearing from the bottom, and you see that you have a nice zone here of consolidation. So 101.21. Once that is broken, I would definitely go on a trade long based off the full send. So it goes 101 to 107. Not many of you guys trade, you know, the futures or whatnot, but you want to look at futures to help you with figuring out what's going on in the SPY and indexes, Qs and whatnot. But once you see this, you're honestly able to go long. And I went on Qs based off NQs. I think it was Wednesday or something like that. Yeah, I think it was here. What day was it? Yeah, it was Wednesday. I went off of this, but I think it was smaller time frame. I think it was 5 days, 5 minutes that the full send showed up on. It was here, I believe. This is Wednesday. Yeah. So it was somewhere around here where I had the arrow and I had the full send. I was able to ride this pretty much all the way to the top. So full send is fairly simple. The way you look at it, a lot of you guys are worried about Elliott waves. If you've never studied Elliott waves, don't try to study it through the code. If you're going to study it on your own without the code. The code is programmed not only on Elliott waves, but there's, guys, there's, I don't even know, there's, let's see, there's, I don't know, there's how many lines? 1,500 lines of code. And this is not only Elliott waves. There's a lot of fibs, there's a lot of EMAs functionality, and then there's a little bit of volume involved as well. So when you're looking at it, if you want to trust the system, you can. If you don't trust it, that's fine. But here's a bearish full send on Q that showed up. So at this level, this was your level. It showed up. This was your candle for shorting. And look, did it ever cross above that candle? Nah. You shorted here. I mean, if you know anything about, you know, the fibs now that you're getting familiar with it, you had some levels for rejection. Here's your EMA being crossing down again. So first one here, continue here. So you had ideas and the tools. You just got to define your own strategy. I'm giving you ideas. It's up to you. What works for you? What is your personality? What is your appetite for risk? Is it that you short right here or you short below the candle? That's you. I can't tell you that. So full send in a nutshell, it's looking for the, so usually the way you play Elliott waves is the third and fifth wave. The third wave is the longest wave of all of the waves. The fifth wave is usually the most impulsive wave. So usually when you see something like on the daily here, you guys see what happened here? 1, 2, and you guys see how long the third wave is? Any wave longer than this? Nope. Look at the fifth wave. You guys see the fifth wave, how explosive it was? It went from 317 all the way to 371.
Wow.
Fairly impulsive. And that happened in one swing, guys. This is one swing. Swing low, swing high. Third wave had swing low here, and it had a higher high or lower high here, then it consolidated, then it broke. Third wave is where you can expect choppiness. The fifth wave is where you expect explosions. And that's what the code finds out for us. Based on volume, based on EMAs, it's able to predict, oh yeah, this is a good entry for short. For instance, it showed up above and you're good to go. So I just want to touch base. But usually when you get full send and you get an arrow down to be together, I know there's people on the call that have it and they've seen it. When you have an arrow and a full send that show up together, I mean, that's literally money, guys. Every single
That's
time.
a deadly combo right there.
Like, you can literally close your eyes and go on a trade. And these arrows, I mean, let's just look at it. He got you to go here, go long here. So the way I would play it, do you get in on the first candle? No, you don't have to get in the first candle. You look at the VWAP and the trend bar, and you have an arrow. How many confluence points is that? Arrow 1, 2, 3, and you're above the EMA. Let's call it 4.
Yep.
Agree? You got
Yep.
4 confluence points, boys. Like, there's no reason not to take a risk. We are risk managers, not profit managers. I will take a risk here, and look at the VWAP. He never like flinched. It was far away from it. So when I expected that we were going to come back the day after, we're going to dump till 340, yeah, it worked. And then look at this. This is your second point here. So you wouldn't have this point till it came. But here, then the next time it comes, you get a nice pin bar, you take this long just off the price action. So from here, you could have taken it all the way for $2 on the run. But that's not having bias, not being, oh, where is it going to go? It's just the price telling you what it wants to do. And somebody asked earlier on the trending update, what do you do? Oh, okay, well, just opposite what I did on the bearish day. Here you go. What is this here?
Bull flag.
Bull flag. And then here you go, another one. What is this?
Over and over.
And it happens again. And it happens again when you have a trending day. This is where you make money. You do not make money on consolidation days. Then you have a nice, maybe you call it even falling wedge. I'm doing my best to chart quickly so that you guys see it, but it just keeps repeating, guys. Every single one. Entry, go long. And then, I mean, let's say you want to fib it out from here to here. Take your money at 127. Take your money. Look at these hits on 127, 1618, and 227.
They're all over they're all over the EMA A line.
Yep. So just simplify it, guys. There's no reason to, if you want me to focus more with you guys on naked trading, nothing here, great. For me, what kind of works for me is that I get the orbs to work for me. If I want to trade and I want to day trade, guys, you will not have, with the 9 EMA and the VWAP and the orbs, you should not have many red weeks in your trading, as long as you're respecting your stop losses and you're respecting the levels. You got in here on the short, your first one to trim is here. Your second one, if you have one contract, you get out here. It can go on without you guys. It's okay. But it can also reverse if you don't take it. And that's where a human mind gets greedy and they're like, no, man, I hope it's going to get out. I also gave you guys a free study on the bottom. And if you guys don't believe me, how here. So look at this. There's 200 lines of code on just the one that I gave you guys and posted in the Thinkorswim. It's telling you the momentum is dying on selling here, is it not? And it's hitting 2%, and you get an arrow right here. What could that indicate? Well, there's a lot of divergence on the momentum, meaning that the shorts are burning out after this initial run. They had a low dip, and I'm getting an arrow on this, and we're crossing the 9 EMA plus the trend bar. what should you do here? I mean, it's fairly simple. You just go long on this and you run it. You take your 10, 20% and get out. You do 10, 20% on 5 trades on 1 contract each. Let me know how your account does. So does everybody that's new or old understand the confluence points of what they could be? If you have a confluence point, let's say, you know, Orbs uses variable moving average. Yeah, sure. I mean, if you use variable moving average, that's your thing, right? We're just gonna have to define a different color because they're all purple. Call it orangish, just so I know which one it is. If you use VMAs there, that's great, man. So you can use the VMA as a confluence point along with the Orbs, with the VWAP. Use 9 EMA, sure, use that. Then you would have the arrows, you have the full sentinel. I mean, look at this full send on the VMA here. I mean, it's almost perfect. So it hit perfectly. Then here, once it got above this trend bar and the 9 EMA, which was consolidated, look at the consolidation here. Guys, see that? I mean, that's picture perfect. I mean, you want to get that. You want to get in here, and then when it breaks,
Yep.
below it, you want to short it on a retest, and look at that. And it works perfectly. So trading is very simple, very, very simple, but they like when you're in a rush. When you're in a rush, they know you're gonna make a mistake. And when you get greedy and you don't want to take 20%, just take 20% on $1,000 every day. Let me know how the 30 days goes.
Yeah. Hey, Shorty, on the green box on the consolidation, Catching Rockets was saying if you measure from the top of the box up 23%, most likely is going to go up 23%.
That's correct. The boxes and consolidation ranges are your basically. So here, if I drew this perfectly, right?
Or down 23%. Up or down.
It plays both ways. So here's your zone, right? It's a little harder in Thinkorswim because they don't have the right tools. But let me
Yeah,
try.
I don't like Thinkorswim.
0.24. Okay, so this will be the level here, somewhere around here. And look what happens then. Your rectangular consolidations are measured moves, and they are always going to be the same measure. So I just took the measure, and here's the end. And look where your arrow came up, and where your indecision came as well. But then before, you also had another consolidation that was much bigger. So look at this zone here, right? So you just have to look at it different time frames. Isn't this consolidation too?
Yep.
So from the top to the down is negative 0.5%. Okay, so somewhere around here. And look at this. So if you took it here, this would be your target. And look, right on. That's where it had a little bounce, get the people out, and then it continued down just to sell off. And it just worked nicely.
Thank you.
Okay. So does everybody understand the confluence points? I really, really just want everybody to like, yeah, man, we got it. If you don't, please ask questions, guys. I've never said no to anyone on questions.
A little off topic, but so say like you already have like your plan A, your plan B. What do you use to determine what strikes you're picking for like 0 DT, or if you're playing a couple
If
days
you're
out?
playing 0 DT, you want to play the first strike that's closest to the money. You're at the money when you're playing those. You do not want to get delta to be like 0.20. I usually on the 0 DT, I'm looking for delta to be like 0.5 and higher. I want to get the most money for the move that it makes. Okay. If we play lottos, yeah, if I play lotto, I'm getting something further out in case it reaches that. But you guys notice, as you come here, even if the move is happening into your favor, they're just killing your contract. They're trying to close the contracts to zero. They calculated their net delta. They know they have to send these contracts. Let's say these calls here, 343 calls have to go to zero. Well, from here, they're at 10 cents. Up to here, they're probably like 60 cents. And then they're like, there's people, I promised you, retailers, like, man, we're going up 343. Here comes a V shape. And they're like, uh-oh, thank you for buying the 343 calls at 70 cents. Now they're going to zero. And look, this is how they make money. You just have to understand that that's their way of making money. But this was a $10 drop on Qs on Thursday from 347 to 337. Pretty good range to play. Okay. So now that we covered this, right? So a lot of people are like, well, how do you use VPOCs? You don't have to mark every VPOC that you have, right? So if you look at, and I also posted this study on there, and this is not my study, the Shorty New VP, that's not mine, but it's a really good one, so I use it. So let me just remove TPO because I don't need it for now.
Where do all the arrows come from, Shorty?
The arrows come from the script called here, Shorty Arrows.
Okay.
I'm just gonna remove everything and then I'll bring it back.
Those errors are deadly.
They're pretty good.
Gotcha.
Okay, I'm just gonna keep this for now. Okay, I'm just keeping the levels on Qs. So we know the floor was set pretty much. If you look at it, you know, we had a VPOC here. That's the first one that sticks out in my head. This was a VPOC here, and we came back psychological 340 level as well. Agree? Then you see that there's a VPOC here below as well. So for me, for instance, let's say on Monday, we are able to break this recent value area low, which is 338, right on the dot. There's a high chance that you're going to revisit 334.52. So let's say that, you know, Monday's coming, and that 334 happens to be lined up to be the orb low. What do you guys think I would do?
You going?
Well, for me, I like to look at, you know, if there's a bounce play that I can play for 20%, and this is a major VPOC, as we just saw, right? The VPOCs are basically untested levels.
Mm-hmm.
That level wasn't tested, and this one was tested, but it's a good, you know, zone. So if it goes to 334, you know, you have the 335, the psych number, so that's why we do the man zones around it, right? So I can't see it really good, but I think it's here. I can change it to make it easier. Oh, let's see. Okay, this helps me a little bit. My eyes. So this becomes like a little demand zone. You guys see, I'm just grabbing the volume around it. So it becomes a little bit of a zone. And it comes all the way to about 335.5. So now the way I will look at this Monday, if you break this this 337.98 level, I'm going to short you. And you can short directly, you know, when it breaks, or just wait patiently. It will do something like this, and then they'll come to our level. If I see the candles are getting smaller, the volume's getting exhausted, and let's say you're looking at the MACD and you're like, okay, well, there's a bullish divergence on 30 minutes. And if you look here, look, there was a bullish divergence here. It was telling you that there was a critical level that is going to go up. And here, it looks like it's ready to cross up. You guys see this, the 30 minutes? Right here? Well, I'm just looking. What did happen last time it crossed from there? You guys see this? From here, I mean, the MACD crossed up, but it really didn't push it much higher. It had a bounce, but then it came back down and it continued down. So if this crosses up, let's say it comes back, it's crossed up now, I would look to short it at the 340 level. And if that 340 level breaks, then there's a strong chance that we're going to go into that daily pivot as a magnet. And then when you look at the VPOCs above, you guys see any interesting stuff? So look at this. And then you have a VPOC right here, which lines up, oh crap, it's with the monthly pivot, right on the money. And you basically just played the levels that we have, right? And there's a 2x POC here, and then a nice zone here. So you're looking at this tomorrow, and you're like, okay, well, what can happen? What I would expect to happen is they want to continue maybe down, but they're not going to just send it down. It doesn't make sense for them. Because if people swung puts, because everybody, closing day, we had a 4-day holiday, you think the retail mindset is, let me buy puts, right? I mean, the retail thinks that way. So when they do think that way, what's the easiest way to get you out of your puts? Well, if you're in 335 puts, right, the easiest way for them to do it is to send it 340. Would you guys agree? If it starts going to 340 and you're in 335, are you getting out?
Yeah.
Yeah, most of you guys will get out. Hopefully you take your stop loss and you move, you move away from the play and you look for the next level that it's going to reject. And same here, right? So if it breaks this level, you wait for it, you wait for the retest, and we go down. And that's where the VPOC, like this one here, comes into play. You will always get a bounce on the VPOC. I don't care what kind of VPOC it is, you will get a bounce. You don't immediately buy, you see how the candles are forming. Are they looking huge like this, entering the demand zone, or smaller? If they look like this entering, you can expect a bounce. Excuse me. And same concept. Once it comes here, let's say it wants to break below this, well, then we know the levels where the next one is, right? So we had a level here, and then you just draw it. So 334, I don't know, there's a little bit of level here, but nothing critical that I'm seeing. So this is the 330 is fairly critical. You guys see that it's 2x POC, 1, 2. So this one here, and then just psychological, you have 2x POC, and then here you have a decent rejection. So I would call this just a POC. And then this is your VPOC here. And this is what you have to play. So tomorrow, you mark these levels, and if any of your trend lines and your confluence points agree with this, hey, you break this, but you're also breaking on this level. Let's say you're also breaking, where's the text thing? Once you break this level here, you're breaking the key VPOC, you're breaking orb low, you're breaking trend bar, and VWAP. I mean, what else do you need? Your strategy is looking for minimum 3, you're getting 4. Your strategy is telling you take the trade and you listen to it. That's how robots and algorithms work. They don't go off of emotions and feelings what's going to happen, but what it's telling them. You broke the VPOC, or for me, this is a short. And if I get stopped out, this will be my stop loss. You basically put it, okay, if this happens right here, you have to have a plan. Let's say this, should move it below, sorry. This happened here. Well, okay, well, if that happens, I see a little bit of a shelf here before the previous day. I will just put a stop loss right here. So I'm risking how much? I'm risking $1.46, which is this area right here. $1.46 is my risk right here. But what is my target? Target will be right here. What is my target? What's the range? From here to here, it's $3.32. You guys agree?
Yeah.
So it's 2-to-1 trade. Is it the best trade? No. Minimum 1, 3-to-1, but 2-to-1, you can take it. When you're growing your account, 2-to-1 is really good. You take the 2-to-1, or you can reduce this to be here, let's say on top of this supply here. And now you have a really tight risk. So you have let's call it 330, let's call it 338, and you have 58 cents risk for a reward of, what do we say? God, I hate toss with there. For about $3.32 profit. So that's pretty good. I mean, that's a really, really good trade. And that's how you have to start thinking about it is, am I risking too much for a little bit of gain, or what am I doing? Like people just bet on, on games, on soccer, football, or whatever, basketball. He's like, yeah, man, I bet $500 to make 510. And I'm just like, okay, well, that's stupid. Why'd you bet $500 to make $10? Like, to me, that doesn't make sense. That's just irrelevant and it's stupid. Like, you're going to lose that money. You want the statistics to be on your side, not against you. So when you look at the trades, statistically, we have the VPOX for a bounce. If it goes below it, short it here, and just get out of the trade. You wait, especially when it's lined up with, whether it's orb low, orb high, or any other fibs, or 50%, they play a role. Then, you guys do notice that, you have these pivots. You guys have these pivots on trading view. Some of you have it in toss. But when the price action on 30 minutes, right, like even anywhere, when I switch it, right, what do you guys see? Where's the pivots? Where's the price? You guys see that all the pivots here are above. That means resistance is overhead. It's over the price. Right now, we are entering a really bearish mode until we get a bounce and we take out probably this level here of 348, 350, which is your monthly pivot. You have to have the pivots below you as support to go higher to reverse it. And it works like a charm. Anytime you look at a chart, if you see the pivots are like below, look at this. Here's Roku. And Roku is notorious for hitting pivots and dying. So here you have double pivots here. I mean, look at this. Double pivots. They trapped it over it. And now it has a lot of resistance overhead. We really don't want to touch it till it breaks about 121, 122. And by the rules, if you guys know what I taught you last time and in previous classes, when you have something like this, right here, this is accumulation. They're accumulating this stock. And if you look a little bit bigger picture, right? So let me just go on like 4 hours. Do you guys see this? This is a huge accumulation zone for this stock. Remember, this stock was $500 not too long ago, maybe 6 months back. Yeah, it was $490 with a double top.
That's crazy.
So again, the Wyckoff that we talked about before, right? And I'm throwing a lot at you, and I'm doing it on purpose. I want you to understand how the markets work and how you, from bigger picture, go to the tiny picture of orbs and daily and trading intraday. So for instance, just think about this. This was the previous zone here that I highlighted. Let's see. I hate these volume bars, but you guys see this area that I grabbed. It's here, here, and then look what they're doing. I mean, this is a perfect accumulation. Let me just do this to make it easier for you guys. Okay, so you guys see they accumulated this stock, and this right here is called a test on the Wyckoff. So accumulation comes a test. This is where they retest, and then they take off. If this is where they took off last time, right, it does not necessarily mean they'll come back to it, right? But there's a high probability that this buyer or seller that sold a lot of it in this area, probably somewhere in between these two levels, if this guy got it at 75s and even cheaper, right, I would say at 30s, he sold it at 400s. Do you think he finds value somewhere in here at hundreds? Of course he does. I mean, why not? If he knows last time he sent it, look at this. Here's another, accumulation. MC, perfect wick here, perfect wick here. So now if it breaks this level here, 100, which is kind of like a psychological level, their goal is going to be, okay, well, let's send it to $80. At 80, oh man, they would buy the hell out of this. I don't care what it is, what they're doing, they're going to buy this. And then they basically start the process again, accumulate. They do a little test as they did previously. They would create a new zone, test it, and then they send it. And it goes much higher. And then you have something kind of like a burst, right? You have these little bursts that happen here. So I actually play this and I remember it. Let's see. So you have something like this that looks like a falling wedge, right? And it also looks like a bull flag. So just be realistic with yourself for a second. This stock's been running from 66 to 400 and it has a bull flag. Bull flags are measured moves. Do you honestly expect it, just think logically, to make another $426 run? Can it? Yeah, of course it can. I mean, we can't tell the market what it wants to do. But do you expect it after this huge run and accumulation that is just going to continue and go to 900? Just think logically. Well, there's no way, guys. There's not many buyers. There's not a lot of power left behind it. So this bull flag was a bull flag to create a double top, and it did. And then, your neckline was right here of this double top. And that was your shorting level. If you missed all of these other signs to short, this was it. And basically how they trade is fairly simple. They, rarely do they play, options, the big institution hedge funds, but they play the distribution zones. And here, if you look at it, so this right here that you see, does anyone know what's it called based off the Wyckoff? This right here? It's not a double top, but what do you call it? I'll give you an acronym. Anyone what that stands for? Anyone? This is called a buying climax, meaning you're getting done with the buying. This is now all retail that's doing all the shopping here. If their retail is doing the shopping, what do you guys think these guys that had it at 50 are doing right here?
They're selling.
Of course they're selling. So they're letting you come in. They created a consolidation box where they know once I bring it back up here, the retail is going to see we held this level before, and retail is going to drive it back up, and I'll just sell it again at this level, and then we'll continue. Then they come back again to that level, and retail is like, yeah, let's go buy. And this is where they literally empty out the last piece of their warehouse stock that they have, and they're out. They basically closed everything around here and here. And retail is kind of left and like, oh my God, I'm back holding a stock at 400 and it's at 100 now. So now, what do you think they're doing? Well, now they're buying again. And it's telling you they're buying again. While retail is holding here, right? They're going to hold more. They're going to send this up here. Let's say, I'm just going to pick on somebody, Mr. Bean had the shares at 394 and he had, let's say, 500K worth he bought at 394. What is psychology of Mr. Bean once the price comes back to this level right here?
He's getting out.
I'm out of here.
You're going to get out, because what it means for your account that you're break even and you're like, fuck that, I'm not holding this anymore. Right? Well, usually what they would do is once you start selling and they see that there's a large quantity or liquidity being formed, they will send a lower, they will grab your shares, right? And then is when they will look for opportunity to take it higher. Because remember, their average is also now higher, so they need a little bit better return to send it higher. Maybe not the best stock on Roku because fundamentally, I think that market is becoming very, very saturated. And I'll send you guys a report that I got for KPMG on streams, right? I mean, you have Netflix, you have Prime, you have Apple, you have Roku, and I don't even know all the ones. You have Fubo TV, you have, I know every channel now, like I was going to watch Premier League Soccer, NBC has it's called Peacock. You have Disney Plus. I mean, there's so many apps that is so saturated. And when you have saturated market and, pieces of shares are being taken away, well, your stock's not going to perform so well. And that, writing is on the wall for this guy. You can't keep increasing prices, for instance, on your service. Well, I don't know what the true value is of you increasing the price, right? I'm not sure what extra are you getting from Netflix when they increase the price? Anyone?
It's like you said, everybody else is offering more than Netflix now.
Exactly. So these stocks that were good at one point, it's time for them to actually slowly die down and come back to the normal levels, guys. This went. I mean, just think about it. These people were able, if I was to just add the volume profile, the standard one. You guys see where they loaded on these shares? I mean, at $12 was the highest volume ever created on Netflix. I will just leave it at that for a moment. At $12, guys, this went to 700. They're done with it. They're looking for new opportunities, new tech, new innovations to be part of it. And now, once it loses this kind of belly here, I mean, it has room to come down quick. So you have to look at it, when I chart stuff like this, when I start looking at longer Roth IRA, investments, I will definitely look at this. Fundamentally, I'll look at revenue growth and I compare that to the expense growth. If the revenue growth is bigger than your expenses are growing, and you look at the cash flow and you do the same thing, I'm like, okay, well, this company has potential, it's growing. But if your revenue growth is not growing faster than your expense growth, that's when you know the company's dying down. And just take a look at Netflix. Why do you think they're increasing fees? Most likely because they're losing subscribers to other saturated competitors, whether it's whoever, Prime or whatever that might be. They're losing it, and these people are offloading. Their average was, you guys saw, it was $12, and it went 700. Any smart person is gonna get out of there. It's life-changing money. Okay, hopefully I didn't bore you guys to death with this. Does everybody understand the orbs and how you add the VPOCs? You can trade the VPOCs alone, but you have to also be respectful of the VPOCs. And usually when you trade VPOCs, because they're not intraday VPOCs, meaning they're formed over days, weeks, months, you have to buy further out contracts. So for instance, if I'm looking at, what is this, Netflix? Okay, well, Netflix looks like it's going to go back here at 331 level. So any below 339, I guess I'll watch. Let's start here. Below 339, I guarantee you goes 330s on Netflix. And look at the spike we got last time from this demand zone here, right? Same concept. You went from here and you went to 400. So somebody was able to pocket like $60 a share. It created a double top. It had a falling wedge here. Boom, created a double top. The neckline short was there, which is also your pivots. And now you can expect a little bounce. And then you have the daily pivot for rejection. You can take a long, probably over this value area high, 343. You have the POC here as well. So, and then if any of these levels, let's say this level matches up with orb high on, if we gap up, let's say on tonight, and this matches up with 344. Well, you wanna wait 30 minutes and make sure we're gonna stay above this level. As soon as we dip below this level, for me, it would personally mean that we are weak and we need to come back down and time short it below 344, right? And then if you miss that entry, you're like, okay, well, what's going on? Well, then you can short it below let's call it 340, and it has a chance to go to this major demand zone of 331. But initially, I'm using Confluence points to find, does the 344 matches maybe with the orb high? Does it match with orb 50? And the more Confluence points on these major levels you're getting, the easier it is to take a short or long. Did I confuse everyone? Okay. What questions do you guys have? I think I was the one talking the whole time. My throat hurts. Mr. Bean, does this help you? The full send, do you understand it? What questions do you have, Mr. Bean? Don't be afraid to ask. What questions do you have? Let's just go. If anyone has questions, I mean, I'd rather answer them now than let you guys go into another one.
I had a question on the full send. Are you going to go through all the different settings?
Yeah, so if you have, we can go there. If
Okay.
you have the full send, let me just load it up and I'll just remove everything for a moment. So this is the only thing. So if you go here and you click on the settings, right? What I do, the summaries, I keep them to no, meaning if you do the summaries here, it's going to give you the little box and it's going to give you the ratios of the waves. You really don't need to care about that for now. Okay. So if you want to become an Elliott wave master, then you'll have to, study a little bit more to figure out the relationship between the waves and the ratios and the fibs that it needs to use and the rejections, right? All of this, it does it for you. So instead of you doing it, it kind of calculates everything for you, for the rejections, for the bounces. So we covered where the full send, happens, right? It's usually whether it's a bullish fifth wave or a bearish fifth wave or a third wave, it will come up. When you have a box like this, when the green line is on the bottom, it's telling you that this is a high probability short trade here. And I would say it was pretty high probability. And it means here, if you get the short right here at 364, the way you can play it is you can play below this candle here on the short side. So this is the short side. You can wait for this candle to break. And then you can enter short, which was in this case, I guess, 360 or whatever level. So you can play that bearish. And this here, if you look at it and you scroll down, you guys see the probabilities and the measurements of these full sends. If you're taking a bullish send here, let's say full send on the bottom of the yellow line, that's a medium probability, right? You might not get the move that you're looking for, okay? If you're, lowest trade probability and when these come up, I definitely I would not even look at it. And then the high probability is the one here where you have the green line and it's rejecting. That's a really, really good probability. And the corrective wave, you don't really care for now, because this means it's just basically like a little bounce. It's going to get a corrective wave and go down. And usually that's where the full send shows up. Okay. These here lines, that if you want to keep them, these are just your EMAs, I believe. I'm not sure. I don't use them. This used to be the 9 EMA and I think 5, but you can backtest that, add 2 lines of 9 and 5 and see if it is or not. Okay. Then if you want to, let's say, hide the boxes, you don't want this, because sometimes for me it gets too much and I want to have a clear chart. You uncheck show study and you click this, and now you don't have anything but this. But here's the summary. I don't want the summary. I want to have this here. I'll put that to no show study, and I click apply. And now all I'm seeing is the Elliott wave numbers, first, second, here's your third. So this looks like a failed wave Elliott right here. But I'm able to tell. So this one looks good. First, second, third. Now this was a retracement, corrective wave. Now we're entering the fifth wave on Netflix on 30 minutes. So is there a chance that we're going to get a corrective wave like we talked about? Maybe it's 340, 344, 345. Probably, yeah, there's a high chance we're going to correct that and come back. And then if I go on higher time frames, if I go look in 4 hours, I'm also able to see that there's a fifth wave on 4 hours. And you scan through it till you find, so a second wave on the daily. And it looks like it's consolidating just from the price action. And you had a bearish send at 450, which I would take a note. If I'm looking, you can mark it as previous FS, bearish FS, the low. And now I'm looking to see if there's any full sends on the higher time frames that I should be aware of. Like here, I don't see any full sends popping up on Netflix. Maybe not the best one to chart. Most probably people don't trade it here. Let's go to something that we love trading. Okay, so on the weekly, right here, it's telling us that there's a bullish full send on NVIDIA at 207 level. So NVIDIA closed at 212. So tomorrow, it's worth watching the video at this level. And what do you guys think expecting? Most people are expecting 200 level, right? You would think, oh yeah, we are 207-ish. We're probably going to go to 200. Well, probably not bad idea. If you see here to play weekly bounce on this, if you see that it's going to hold and you don't see a lot of strength, because you might get a nice pop above it. Then you go on lower time frames and you just look at your favorite stocks and what's happening, right? So this one no longer full send. Let's look at 15 minutes. So no full sends on 15. 5, nothing here. 10, same thing. So you had one that was here and it created a double top right off of it on the full send pre-market, and then it came to that level again and it literally dumped. So that's the settings that I use in terms of intraday stuff here. If you want to change it, I don't think you care about diagnostics. Let's see. You really don't need the diagnostics to tell you, like the minus, the 5s, the errors and whatnot. You can ignore that. What else? I cover this. You remove this. You can put this to no. Show study if you want to see it. And honestly, you just play the candles as you see them. So like, see, I think, what's the name of the stock that I saw it a lot on? I think it was on Lowe's. Yeah. Let me.
A question on the full send.
Yep.
So in the example you showed there, it came back and bounced off the full send. Is the full send blown away once it fails, or is it become like a point of contention?
It becomes a point of contention. Yep. So like this one here, we had 30 minutes. We had a full send on this level. This is the one you're talking about, I believe, right? It was 327.
Yeah.
So here, think about it. Price action wise, what is it doing? One top, double top, right? So it's coming to a point where it's sold off before. So whoever here did not get an order for sell is waiting. It's like, you're not tricking me this time. I'm going to come in here and I'm going to sell when you hit that level, right? Which is basically your supply and demand zones, how they're created. So for every action, there's a reaction, right? So here they're buying and they hit it to the level where last time it was a bearish full send on 30 minutes, and it worked pretty good this time as well. So when you have a previous full send, that's what I was saying on the weekly, on the weekly chart. If I go, there's a full send here, right? And you can tell that this area right here was fairly important for it. So if I just look at it from naked charting, there's my indecision before the big pop on a candle, and look at this. So I would say this is a decent block order, and this one right here would be a decent block order as well. And I'm just looking at this candle right here and this big pop right here and this candle. So just naked charting, these would have been two of my levels for it where it's going to consolidate now. And this level, and remember, this stock was at 350. They're getting a deal, a bargain at 200s. Would they get a better deal below at like 180? Probably, yeah. But now I would definitely play some, zero weeklies here, or since it's a weekly full send, if you go out and buy, what are we? Maybe buy June 17th, which should be your June expiries. You buy some contracts for 240s, 250s on this. I would say there's a high probability that you're going to make money on that. And this full send, look, when it showed up here, it went from 206 all the way to 280, 290.
What ticker was that, Shorty?
This is in the video.
Oh, thank you.
So if that overshot and went down to about 200, and it went up and it broke that 207, I think that's where the full send is.
Yep, 207 is a full send. Mm-hmm.
Would that be a trigger to buy?
At 200, yes, I would buy based off the psychology of the stocks and the even numbers. But I would not stay in there long on that trade.
What I was asking is the break above the 207.
If it dips below and then it breaks above it, is that what you're asking?
Yeah, is breaking above, would that be a trigger?
Yes, you can definitely use that as a trigger. Usually, you want to use it as a retest of it. I'm not a momentum trader, and I don't know how long, I think you've been here maybe a couple of days. I don't buy breakouts as much as I like to buy when something is, I like to buy when they're buying. I don't like to buy when retail is buying. Retail plays a lot of breakouts. I usually like to buy it as support. Like for me, for NVIDIA, my average on shares is around 215. So for me now, average dollar cost, if I can bring it down to be around 190, 198-ish, well, hell yeah, I'm going to do it. And, for others, are they going to do it? Well, probably, thinking what's in the future of economy and the chips and whatnot, it doesn't make sense that they're not going to be buying. Somebody's going to be buying here. Maybe not the same buyer as it was before, but they empty their warehouse. They're coming back into a zone where, they're going to expect buyers. They want to be with them. So yes, in this area, 195 to 207 for shares, perfect. A break of 207 and retest, great. You're going to guarantee you get 210. And then, you have the 227, which is a nice area of just of the smart money where they got in before. So to me, this looks like a liquidity sweep right now, the way it's set up on NVIDIA. They're trying to get the shares from NVIDIA from retailers right now. And it's going to go, probably there's a high chance they dip it to even 196. And if they dip it right here, does anyone know what the pattern would be called?
The market maker pattern.
It's called the market maker pattern. And they do this a lot, is they have a liquidity sweep. Does everybody understand what a liquidity sweep is?
Yes.
For those that don't, so the big money got in here. He was able to buy all the shares. Now he sold them and he's like, okay, well, let me see what I can get now. People that got in, let's say here, let's say me and you, we got in at 287. Well, and you missed your stop losses, right? Let's say you didn't get it in here, you didn't get it out. Well, now you're like, okay, well, I'm going to add shares too. Well, same concept that I just said, that I will be adding shares in this level. How many more people are looking to add NVIDIA shares in this area? Probably a lot. But me and you, again, don't have billions to buy, but they need $1 billion orders, millions. So the only way they can get those shares if they get my shares, if they scare me out of it. So if they're able to scare me out of it, that means they're going to get it and they're going to scare more people, because we use what we see on the levels here and they know where your stop losses are. So if they have to dip it below 187 to hit where the liquidity, where the stop losses are, well, definitely they're going to go for it. And then you can expect a huge burst coming out of there because they got their shares and now they're ready to pump it and tell the retail, hey, you missed the jump on the boat. And then what happens is there's a lot of short squeeze. People are shorting. So the gamma is building up. And then once they start buying with a huge volume, this literally looks like almost like a rocket up, because you have the short squeeze, you have the negative delta that they have to account for, and they have to bring it back to the positive by the rules of their hedge funds. They're like, okay, well, we shorted it. Now we have to buy a lot of shares, and they keep buying shares, and then you get this pop, and you're like, oh, crap. I had the stop loss here, and look, the stock exploded and went higher. So NVIDIA is in a really, really tight area where it can pop again, and here it would almost have like a double bottom from this level of, let me make sure this level is, the low is 2065. So it would be 2065. This would be the level here of the full send. Yep, 2065. So you're watching this level tomorrow, the 205 is right around the corner. So you watch that, and then if you're able to get it and you see the strength, you can buy it. If it breaks below and to go to 200, which definitely can, then, like you said, this is a previous support. Now it becomes resistance. So you get over it. Basically, it would look like something like they dip it here and they go over it. And this is where, for options, I look to buy.
Would that be for June 17th, Shorty?
Yeah, you would look something for June 17th if I was to play this. But
Okay.
I would let it play out here. I would look for, is it going to break this level at 205? Is
Yeah.
it going to go to 200 and then it has that 195 level? Below that, I remember it was 180-ish or something like that.
So safety entry would be about past 205 and up.
205 and up, you
207.
want to, yep, exactly. 205 and up to retest, that's great.
Okay.
But
Thank
just
you.
notice that you have a major, you guys see anything from patterns perspective on this? Just naked wise, I mean, there's a big pattern staring at your eyes. You guys see it now?
Head and shoulders.
Yeah, you have a massive, massive head and shoulders. Sorry, I meant to draw this. You have a left shoulder, you have the right shoulder. I'm sorry, the head and the right shoulder here. And, you know, if you do the measurement between these guys, what is this? Negative 140
Huge.
points. So this sends it back to about $80, right? So if the break here and you take 140, so right about $80, it will send it. And if I just look at $80, what do you know about $80 here?
You
Was
have
this
an
level?
you have an indecision candle.
Yep. And was this level ever retested since the stock exploded?
Nope.
Yep. Somebody here that has big money is like, okay, thank you guys. Well, you keep going up. I'll keep my order right here. And he knows that there's other people that are in this area as well. Okay. Sorry I got away from the topic, but for the full send, for the weekly, like you said, Mr. Bean, you can use that as a previous, and that's what I did in 30 minutes too. You can definitely use this as your resistance and support. And you guys will see, I'm pretty sure somebody's seen my charts where I mark previous full send level or whatever, bearish or bullish. I'll mark those levels on my charts. And if you add, you know, the studies, you can then look for confluences.
Now, if that had broken up above your full send signal, would that have pretty much nullified the full send?
Oh, yes. Well, that was a bearish full send from before. This one already played out. When your bull send showed up, or bearish full send showed up here, right? This one played out because you already got the move, right? Would you agree? You got it from 227 all the way to 213. That move already happened. So now it's coming to the point where, you know, this guy had unfilled orders, and now it's coming back to the same point. So the idea is, what was resistance before, probably be resistance again. Because this guy maybe did not sell all the shares or whoever that might be. Now you're looking, well, then there's a buyer, as you saw, around 205-ish level, 206.5. So same concept now is just reversed. I'm looking to see what this buyer does now. Is he going to protect his dollar average where he exploded from last time?
Is
Based on what
this a
go ahead.
5 minute, it's a 5 minute, 5 day chart? I can't tell.
This is right now is 5 day, 5 minute. This one is 30 days, 30 minutes. For volume profiles, we use 30 days, 30 minutes.
Does it matter if the number of days for the full send, does it have to be 5 days? I mean, if it was 10 days,
No.
5 minutes, is it
You
going to
can
be the
change
same?
No.
Will it yield the same result? I guess I'm asking.
It will not. So the more data it has or more to calculate, it yields a different result. It has more or less information. So my typical ones are here. 5 days, like I was talking about earlier. Anything below 15 minutes, I typically use 5 days unless I don't really use 1 and 2 minutes for trading at all. I just use it to see if I'm, you know, if it's a boring day and it's consolidating, I'll switch to these just to see what the hell's going on. But these are the time frames that I use on full sends. 5 days, 5 minutes, 10 minutes has been golden. 30 days, 15 minutes. My favorite for swings is 180 days, 65 minutes. When I typically see a full send on this, I will definitely enter a long or short on these. And they're pretty good on 65 minutes. 65 minutes breaks evenly into 390. So that's why I use 65 minutes, because it gives me 6 full candles per week. Oh, per
Is
day.
there a way to generate, or does it exist, a scanner to pick up full sends so they trigger?
I've worked on it, and and the way TOS script works, the think script, it is impossible to find it. And I've had people, I had Sequence, I had myself, I had a few other people that are coders. We tried to find it, but it hasn't been luck. And if I do find it, of course, I'll share with the people so they know it.
What I do to make it easy to find is I just have like a 12 grid chart with a bunch of different time frames, and I link it to a watch list, and I just click through the watch list. Yeah, but I just click through the watch list, and that way every time frame changes to that stock, and I can go through a list pretty quickly that way looking for full sends. I have a video posted in the video section. I also share my 12 grid with all the different time frames for the full send indicator.
No, thank you. Does that help, Mr. Bean?
Yeah, I'll take a look at that.
Yeah. So with the full send, I would not trust it below 5 minutes. It's just me personally through the experience. I would not trust it to go there. So if you're comfortable using, then that's fine. I mean, use it. But below 5 minutes, I would definitely not do it.
You'll get clapped.
Yeah, I mean, it's just more time, more data. The more concrete decision is, and the same in your life, right? If you go and buy a car on a 5-minute research and you buy a Kia, there's a high chance that you're going to be regretting that purchase because you didn't put much effort in it. And same with the data. Data needs to become information, useful information, and that's why it's, the more data we have, the better. But just quick point on the Confluence. You see here that you had 2 days of VPO or POCs, and probably more if I go to the left. But look at this, 2 POCs together right here. And the bearish full send was right here on 5 minutes. Look at this. And if you draw that, the demand zone around these, this is going to work pretty good. Whenever you see 2x POC, 4x, more than 1x POC lined up perfectly, mark it on your levels. Here's 2x POC, and look at this. Let me go back to 5 minutes. Look at this. Both times it worked pretty well. And you had the full send. I'm pretty sure if we turn on some orbs, you had that. And the VPOC and the full send now are giving you extra confirmation to take the trade, long or, well, in this case, short. But you can play both ways. If it was a demand zone, go long. Excuse me. And if it's supply, go short. But this worked pretty nicely on this level. And a lot of people are probably expecting the 230 to get out on this just because of the psychological number around here somewhere, and they never got there.
Really quick too on SPX, the 5-day 3-minute full sends are crazy. Like they pay.
Yep, and I personally don't use anything below 5. You said 5 days, 3 minutes.
Yeah.
Yeah, I mean, yeah, they work.
No, it works.
So here's your short level. So what I usually do, guys, on full sends, I don't get in on the candle when it shows up. And you guys know that. Does everybody know where I get in?
You get in after the candle, after that there on the candle. Yeah.
Yeah, I get in once the candle is broken, and my stop loss is usually the top of this one here. So look here, you have a what, $10 stop loss, and I mean it went first time to 44.36. Let's see.
I'm sorry. So are you basically buying about 3? Is this 1 minute? I'm sorry. These are how many minutes?
These are 3 minutes. Are you able to guys see my screen?
People that don't have Nitro are not going to be able to see.
Oh, you're not streaming on YouTube?
No.
Oh, okay.
My wife hit record for me, so it'll be up on YouTube after this is over.
Okay, I'm sorry.
Okay, so your entry is approximately 9 minutes from the actual trigger.
Yeah, whenever it broke this candle, it was probably right here. what is this? 10:06, and this one was 9:54. So 12 minutes. I care about candle close. Not so much you dipped below the level. I need you to close below the level. So if it was this one here, 10:03, that's 9 minutes, and I would have been in on this candle. Once it closed, my stop loss is here, and you just keep down. You drive it.
So if this was an SPX, are you actually buying the SPX, or are you doing an option?
No, you can't buy SPX because SPX is a derivative of SPY. You can buy only options on it. There's no settlement. SPX doesn't settle in shares. They settle in cash.
Okay, but in this, what is the percentage approximately between your line there? Like for example, if the option price was $1, how much? You're saying that's 10 cents up there, or I'm trying to figure this out.
Okay, no worries. So this right here is my risk. Okay, this is my risk here, and the risk is the difference between my entry and my stop loss. Okay, that's what you're risking. Are you familiar with this concept?
The stop loss, yeah. The risk.
Well, your risk reward. Are you familiar with that?
Yes.
Okay, good. So here, just for the purpose of math, right? Let's just make this 446, and this one will make 471. I'm just doing this quickly just so people get it and you get it. So this is my risk area, right? And that's also the candle of the full send. This one right here, the low is 446.136. So I will get in below this, and I will play the puts based on the levels that I had below, right? So if I had levels, and I'm just gonna go, this one won't work because they don't have volume profile and toss. If I knew the levels here, so I could use quick fibs to figure it out. Okay, so if I knew that this level here is my entry, and the 50% move of this retracement is around 440, right? That if I get in at 446, I'm getting 21 points for 10 points risk. So it's 2-to-1 trade. And I'm not sure if I'm answering your question, but let's get to it.
No, I understand that.
Yep. So it comes back. Of course, I would trim here because I expect retail to also get out here if they're in. And then it breaks the 61.8 and it goes perfectly to 127. If you have some runners, they make money. And that's how I usually play. I would have probably gotten 440 puts, and I actually did get on Thursday. I did get the 440 puts, and I think I alerted those as 7.2, and they went to like 29. And it's the same concept, right? I didn't have full send here. I was using previous levels, or 44.62, I believe I had from the watch list that I was watching. But same idea, full send. I shorted below the candle here. Whenever you have that ability, you short it below it, you get in, and then you find the next level for your trims, whether you're using Orbs, or if you're in TV and you have the clouds, or if you have any method to determine your previous level of support, that's where you're looking to get out.
Shorty, that full send on Wednesday?
This one.
Yeah, those went from the 4440s went from 300 to it was either 8 or 9 for the contracts. Wow. Yeah, for Thursday's expiration. Those went from.
Yep. No, they'll move, and especially SPX. SPX contracts move pretty.
So that full send right there, Bean, went from $300 for the $4,440 contracts to either 8 or 9. I don't remember exactly, but it was.
You played it right.
I actually missed it, but I think KS or no, who was it that told me about it? No, it was somebody else. Kess told me, and okay. But I missed it. So,
Mr.
Is there a difference between the Hakanashis and the regular candles when you play in the full send?
There is, yes. So I do prefer on Ashi candles to look for full sends, and they will save you a lot of money.
I've been trying to figure that one out, Shorty. Is there a main reason why to use Ashi over regular candles?
Yeah, so Ashi candles consider the previous candle to calculate the next candle. Okay? Other candles, regular candles, they don't use previous candle information at all. They just a standalone candle and it builds on from it. Ashis use previous open close to figure out the next candle, and that's why it's kind of like called momentum candles, because they utilize previous candle to determine the trend and the momentum of the candles. So here, if I'm playing, let's say, full send off of this one, it'll be right here that I get in. So let's kind of look at it for a second. I switch it. Still same level on 5 minutes. It would change on higher time frames, but I would prefer that everyone, whoever has it, that uses Ashi candles on this. For me, Ashi's is on this is pretty golden, and I would not play it on regular candles.
Is there anywhere I can learn more about the Ashi candles? Because I've been trying to kind of learn about them. I haven't used them before. I've been using regular candles forever.
Yeah, I'll send you guys my study guide on Ashi candles if that helps you guys.
That'd be awesome.
So really quick, Shorty, I just want to like emphasize something you say. I only play high full sends on like the higher time frames, but on SPX specifically, the lower time frames actually are really accurate. So,
what's the advantage of playing SPX over SPY?
Well, first you have tax advantages, which I won't go into because you got to talk to your CPA. I'm not CPA, right? So you have tax advantages the way it's calculated on your tax at the end. There's that, and then the contracts. SPX was the only thing that the big boys used to trade on the options and hedging. So the liquidity on SPX is pretty high. SPY is also high, but these contracts tend to move a little bit quicker and a little bit stronger than SPY.
Okay.
So you can get a little bit better moves when you're playing something like this.
Yeah, I played SPX the other day for 11 seconds and made like $2.
That's crazy. Jeez.
Yeah, $400 contract went to like 6 in 11 seconds.
And,
but you can get clapped real quick too, right? On SPX?
Well, you can, same way. You just have to have your stop loss defined. You want to make sure you have it.
Are the contracts much more expensive?
They are.
You can use like what is it called? Like bracket orders where you as soon as you enter, you have like your stop loss and your take profit defined. So if you trade like ERF, you can do, 1 for 1 and do like $1 stop loss and $1 profit.
Yeah, it's automatic.
Yeah. So you can use bracket orders right on why can't I think?
The OCOs on the Active Trader?
On Active Trader, thank you. Yeah, you can use bracket orders on Active Trader to do your stop loss and your profit. So like as soon as you take the order, or as soon as you place the order, you already have a stop loss and a take profit in place. Like you don't have to touch anything.
And most CalPERS do that. I would say 80% of them are doing that, OCOs.
But when it comes to the stop losses, because I have heard or read a lot of comments, whether it's, 10%, 5% of your account. When you're playing something like full send, you're looking at those areas, right? Those risk areas.
Yeah, of course. You have to know where you're taking your money off, right?
But that might be more than 20%, right? I mean, when you look at that candle before and you say my stop loss will be at the top of the candle, that might be a lot more than 12,
Well, that's
20%.
why I trade different than you, right? My risk management, how much I can handle of a loss is different than yours. If yours is, let's say, it's not the top of the candle, but it's, let's say, this candle here, that's okay. Like me and you will not have the same risk tolerance. Maybe I can afford to lose 10 points on this, and maybe it'll be more, especially when you're playing zero DTEs. If it goes 10 points against you, there's a high chance that you're gonna, be drawdown is gonna be fairly decent size, especially if you're playing multiple contracts. For instance, when I play SPX, my stop loss is usually 1. If I'm losing more than $100 a contract, I get out.
That makes sense. And then I also had a question related to you mentioned that you have some runners. So when you buy, what are you buying? Like 10 packs, 20 packs, and what when you trim, what's your first trim in terms of those?
So
that
my
package?
trim is usually 75% the first one. Usually 75%
Gotcha.
of the contracts are cut right out of the gate in the first one. So for, if you think about it, let's say I got in here on this level, 44, 56. I don't even know if that's the right level. Maybe 44.50, which also happens to be psychological level. Then, I had my levels marked. I don't have them marked anymore. If I knew that this was my level here and I had support here at 44.37 and I was up, let's say $1 per contract, I'm out 75%. So 7 times 70, let's say 7 contracts times $100, I made $700. And my stop loss, you can move a trailing stop loss here so those 3 don't go negative against you, or minimal loss so that you still keep the 750. And then I just keep, moving the trail stop and I keep shifting it. And then if I have more, I'll sell the 2 and I'll keep 1, let's say this ran. You'll keep the 1 as far as you can. And then, if you use the trend bar, which honestly, once you start trusting the trend bar, it will be much easier to make and stay longer in the place. So I'm on 5 minutes on ASHI trend bar, and here it turns red, gave you a little signal. As soon as it went below, and you see here that it stayed green on the first hit. You guys notice that. Second hit, it came and it stayed red all the way into the close of this day of Tuesday. And then it switched green, and it never really flipped red on any of these dips. They're all golden buys, like the dip buys. So once you have the trend bar, you have it on TradingView as well. Utilize it for your exits. If you have a trailing runner, and you just utilize this, close above it and I'll get out. Here, you didn't close above it in 5 minutes. Keep going, keep going, keep going. You close right here at 4391. I mean, if you got in at 44.50s and you had one runner to 43.90, this one runner made as much money as those 9 did on the initial run here. And if you don't believe me, try it one time.
This trend bar, what is it based off of?
It uses CCI and ATR. So if I click on this guy, it uses CCI and ATR, and it's the same in TradingView. And for me personally, if you're day trading, 3 minutes trend bar is golden for you to maximize your profits and minimize your losses. Right? So you get in here, it didn't close here, you get out. You broke below it. If you're just using trend bar for entries, you close above it, boom, burn. And that's how you can use it. But you have to play with the charts and learn what you want to do. I've had people on Twitter that they got the trend bar and they use the 15 minutes for swings. When 15 minutes breaks above the trend bar, they go long. When it breaks below, they short. And literally, that's all they do. And if you look here, it would work pretty well. You get in here, you broke higher, you go higher, short. I mean, you can come up with many ways to trade this, guys, and you don't have to do it the way I'm doing it. That's the kind of like the beauty of the trading.
It took me a while to trust the trend bar, but I use it a lot now and trust it.
Oh, you guys will not believe this, but I think Earth's he started becoming very profitable once he started trusting the trend bar. And you can ask him yourself. Trend bar became his best friend in keeping his trades. And you usually see Earth or myself, we have runners that are involved, and they end up usually making 50% or more of the previous profits that you had. Let's say if it's a 10 pack on 9 contracts. And that's mainly due to the trend bar.
I had a question about full send. Why do we play the full send versus this second wave or the third wave? I guess the longest wave. Wouldn't that make more sense?
Well, the third wave is also choppy, right? The third wave, these are impulsive waves, means that it's going to happen quick. When it happens, it's going to drop fast, and it's going to be kind of like an instant no choppiness in that wave. If you look at the third waves usually have a little bit of more like a zigzag action. It have this, it would have this, this, this. You know, if it's a bullish wave on the third wave, it has this. And sometimes people play the third wave when they're playing only shares. Sure, you can buy here, you know, and you have a target, let's say, all the way up here. Sure, you can play that third wave and enjoy the profits. But when you're playing options, when you have the time decay, you want to play something that you get in and it moves. And it moves in the favor of your option. Because if it doesn't, the theta works really, really, people don't maybe understand the impact of it, of theta and rho and how they work in, you know, in conjunction to screw you over and take your money away. And, you know, Thursday was probably the best example of it till like later in the day when it started doing something. So that's why we played the full send. Full send usually guarantees it's going to be a nice move, quick move up or down. So, and I'm just looking at different time frames on 15 minutes. So from here, you got a really nice aggressive move up. I'm just looking back. So from here, you got an aggressive move down and then came back for a double top. Here, you had a decent move. I guess you had a nice move from here. So I would say from 4427 and it went all the way to 4454. So pretty good move, 30 points to, you know, these were 0 DTs on Wednesday. So it would make sense, right, that you can catch these moves quicker because it works better in your favor.
Just to double check then, when you enter a full send after it breaks the top or bottom of the full send candle, you wanna take profit along the way on the fifths. You don't wait basically for the next wave to start, right?
That's correct. If you wait for the waves to start, that means, you know, the IV at the bottom has slowed down. So if, for instance, if I was selling right here, it's already, you know, the price moved on, the IV switched, the market makers already switched the way that the contracts are going to price themselves. So you want to sell into the strength, not once it hits the level and then you're like, okay, well, let me get out. Yeah, maybe you'll miss $30, $40, but you'll be able to get out. If you wait for here, well, then, you know, when you do the bids and ask or whatever you're doing, I mean, calls or bull or bear, you might have a hard time getting a fill and you will not get the desired, you know, price or close to it. So you don't wait for the hit to, you know, to hit it. You want to make sure that you're selling into the strength.
With Ashis, is that an indecision candle also, Shorty, considered?
Oh, this one here? Hell yeah. This is a big one.
I got to learn about some Ashis today.
Yeah, this is a big one here. So usually what you can expect, what's going to happen here is, where are we at 43.90? We're probably going to bounce tomorrow. And you can expect some kind of action to go. I haven't paid attention to the market over the break, but I would expect something like this, where you break 44.50 and then we hit this area again, and you pay attention to see if there's many sellers left as we approach it. But you see the resistance points. You have another one here. Kind of, it's like right there where I marked it. I didn't even look at it before that, but it looks like right here, kind of break above it, maybe even, you know, retest this guy. You know, it's usually not like straight shots like this. I'm just giving you kind of rough idea how I see it flowing. So something like this. If it goes up, it has a nice, you know, if you look at the Ashis, it has a nice zone here that it popped from. Now it's coming back. So if it does this, and if it breaks that 43.80, do you guys remember how important that 43.80 was on SPX from before? Same with SPX, ES. Fairly important level on 43.80. But that's pretty much how I play the full send and the idea behind it, right? It's based on Elliott waves. It uses fibs. It uses EMAs for certain confirmations, and then it sets up the probabilities, whether high, medium, low, or it's kind of like a rejection, a retracement wave. Kind of, you don't play those like these little guys here. You can play scalp long, but most people in the room probably not fast enough for it.
Home Depot's in that nice buy zone again, demand zone.
Below 300 or right at it?
No, it's just below 305, which I've been playing over and over and over again.
I mean, this like especially when it showed up, the full send was, I think it was.
It's on the 10-year, 1 month chart, the full send.
So it'll probably be on this one, yeah. So here it comes. I mean, and this, if you guys look at it, right, and you guys remember this from previous lessons, this is called a breakout level, right? So you guys see that we had, kind of like confluence here, and you see a bunch of wicks on the monthly candle. So 1, 2, 3, 4, 5, 6, 7, 8 months unable to break it. And then we definitely broke above it and went, what about like maybe $150 over. And now we're coming back to the breakout level. And that just naturally, that 292 will act as buyer's heaven because they're like, okay, well, we broke out from this level. We've never tested it. There's a high chance we're going to come back to it and go higher. And if we break, let's say, the 300s, there's a high chance you can short it for $8, but then be quick to flip, right? Or you don't have to short it at all. Just wait and buy the calls here on the bottom. You can buy June's at 300, so you don't miss the bounce if it does happen. And if it goes below, then you just average down at 292 on the swings. Do not average down on 0DTs or weeklies. On swings, you can definitely enter. And then once, let's say this starts going and it's moving, you average up here. You don't know. You should average up on successful trades, not average down on losing trades. If you see that this happens and you bought some here, well, buy some more here, add it. And if you see that it breaks here, then add some more on the retest here, and then you get the run. If you play the 340s or 350s for June, I mean, I'm pretty sure the initial move was right here was over 100%, or maybe even this one here was over 100%. Yeah, this had to be over 100%.
Oh, I got like 150%. Yeah.
Yeah. So this move here, guarantee you, it was 100% on June contracts. And what that means is, and you see here, now there's the liquidity here. This is the liquidity where they're trying to get the shares. So they're probably hundreds. And if they don't get enough shares, what do you think they do? They take
Drop
out,
it.
they drop it again here. And then this is where I will buy again, June 17th.
Shorty, on the monthly on HD right there, when you look at number 2, where 2 is at, was that an indecision candle for Ashi also?
This, yeah, I would say this is an indecision. But look at these indecision candles all around here, right? You see that the whole 8 months here were indecision candles. They didn't know. It was kind of creating a bull flag from here, right? So this is your bull flag being created right here.
I see that. Okay.
And if you measure it, it probably worked right on $155. So 155. Let's see. So right here, 443 was the target based on this. They came to 420, so $13 off. Yeah, this was definitely a bull flag here. And now, this is no longer a bull flag on this pullback because it pulled back a little bit more than 31% of this move here. Yeah, so it's now below 61.8. So yeah, it has needs some fixing for long on the shares, but I would definitely be a buyer here at this 292 level.
I have a question, Shorty, about the ABCD harmonic that you shared before.
Mm-hmm.
Is that the move, that measured move, that since they're both almost the same, would that be considered that ABCD and then you short at the
D.
the D, right?
That's correct. Yep. So you have it here as well, right? So you have AB. So here and this would be your A, B, C, D. So the measurement between this and this is the measurement from here to here.
Okay.
So if I was to do, fibs, you can do it quickly here. If this is my 100%, then I need to enable the 200%. And let's see where it comes up. Right here, what we talked about earlier. So is it considered ABCD pattern? Yep, of course. Because there's a room for error on it. But yeah, there's definitely like an ABCD pattern, and it's similar to what I posted. This equals this.
Thank you.
Mm-hmm. It's a really, really good pattern to play off.
So if you were using that pattern, where would you have been triggered using that?
So on the ABCD pattern, let me go on monthly and monthlies, of course, not many people trade off the monthlies because these take years and months, to execute. So the longer the time frame, you just multiply it. And this is a huge, huge time frame. So if I was to go on something for like 4 hours and look for like an ABCD pattern, let's see, let's look at daily because most people use daily. Okay, so if I was to say that this is my ABCD, so if this was my ABCD, the initial one, I just want to find a decent one here. So what the ABC is telling you, I'll just mark this level so I know the entry. So 375 from here to here. So if I measure this, and I'm sorry, I'm just really bad at measuring. And so this is $51 to here. So let's see, $51, 324, let's call it 51 exactly. So from here to here, so $51 would be about 425-ish. Guys agree? Just rough math. I'll put it right here. So this would be the ABCD pattern in this. And what the ABCD is telling you is when you have ABCD like this one here, it looks like a ascending triangle. You can play, of course, the bull side here, right? You can play the bull pattern, but no, once you come to this level here, 425, I don't know why stop at the 420, but this would be your level entry for your put side based on the ABCD pattern. A, B, C, and then the D here. D is the shorting level. So this would be your shorting level on the ABCD pattern. And this repeats on every time frame that you see. So opposite would be, so here's your A, here's your B, I'm sorry, A, B, C, and then the D would be the measurement from here. So this would be $6 from here. So $6 and then continues down. So where? Oh, perfect. Okay. So this would be where you want to buy calls on the bullish reversal ABCD intraday though. So if this doesn't happen, of course, you don't want to buy the calls into the next day and hope that the bullish pattern works. Any time frame you look at, this works. Literally any time frame that you look at, this can work on. Am I answering your question?
Yeah, I just need to learn a little bit more about it.
Yep, and I can hold a specific lesson on ABCD pattern or ABC patterns for people to help them and recognize them as well.
Shorty, I really appreciate it today. I gotta go hide some Easter eggs for the kids.
No, yeah, I got to prep for that as well. I got to prep for my family and friends. But please just be patient on your entries, guys. The stock market talks to you. Human mind is set up to think what it wants to think and not what it's seeing. Like on this day, the day before, we were a strong bullish trend. I mean, we were running all day. And then all of a sudden you have this huge bearish trend and it's going down, right? Is it manipulation? Yeah, but who cares? We should be able to recognize that, whether it's previous day highs or lows that you're using for, here was your previous day low, and you see that it was a 305-ish. Once it broke below that, you had a little bit of room to short it. I don't play HD on scalping much, but I'm sure there's people that do. Here's, I guess, AMD levels, which I have for some reason. The weekly bottom was 97. We talked about that level being super important for it. And then somebody told me to buy 100 calls or that they're getting into. I just told them to wait. The previous day high was right here. And look what happened of previous day high. They set up a trap and it was never close to even hitting the 100. Right here was the initial balance high and then it broke it. And then pre-market low, I would say, let me make sure what is right here. So you have 97.5 as a pre-market low. Here's your weekly bottom off the clouds. Once you break the weekly bottoms, and I covered this multiple times, you're going to get a burst of energy that it's going to dump it. And then if I was to go into the AMD, this is probably a bearish backdoor, but that it came back and then it continues down. And does anyone see anything here now? We just talked about it. Anyone see anything?
Bear flag.
Okay, what else?
The ABCD.
ABCD pattern.
There he goes. ABCD. So we have 361. I'm trying to get to it. Sorry. You guys see that? Look at this. I measured this with my fantastic tools from TOS. And look, ABC exact measurement is at that exact level where it stopped.
So the D part would be, we'd expect it to be going up from here?
Correct, but this is intraday. Remember, we're on 5 minutes. If it happens in a day, sure. When people play ABCD patterns, there's not enough time in a day. Look how long it took them to break this area here. So you got into this area around 10:50. You set the initial balance low. You did not break it till 2 hours later. You came back for a retest another hour later, and then you went down. So what most people do on ABCD patterns is they short this side here to the D, and then if they get a chance, they'll buy the D and go up. I'm just telling you what most people do. I'm not telling you what you should do, but this is how most people play intraday ABCDs. Okay. So this you can get in for a short side, because then structurally, right, if you look at the structure of the market, what is this here? Okay, this is your, let's say, higher high. This is your lower high. What is this? This is your highest low that you have for the day here. Once you break this, you're looking for the retest and rejections to continue down. The only way you go long on this stock when it was here is the break of this and a retest. If it does something like this, this is where you go. If this takes off on the break of this high and it goes like this, that's okay. You missed the trade. Not a big deal. You move on with your day and you find the next one. Another one will come, but you do not want to go long. If you're a momentum trader, you do not want to go long until it puts in a higher high. And definitely don't use 1 minute unless you're scalping. Don't use this. I mean, look at this. You have to be so quick, guys, on these entries. I mean, this is, yeah. I don't use it. I don't think anyone should use 1 minute for trading. But the pattern just continuously, honestly, just repeat. I used to trade NVIDIA for a living, solely just NVIDIA. It was easy. Here's PayPal, which was also one of my favorites, short. If you guys remember, 3 weeks ago, we set these levels on PayPal. Does anyone remember?
No.
We talked about shorting the low 110, that it was going to go to 105, which was the VPOC, and then it had this level here that we said wait for a bounce. We marked these levels almost what we wanted it to do. And look, does it look pretty good if you played every one of these? You short,
Yeah.
goes to 105, you can short it again, it goes to 100, and you look for a bounce. If it breaks this, then you're going to 92. It's just patience, and a lot of people are itching in the morning when the market clicks at 9:30 and it says ding, ding, ding. Everybody's itching to take a trade. Do not itch to take a trade. Let the trade come to you. You wait and you wait and let it form a couple of higher highs, lower highs on 5 minutes or 3 minutes, whatever you might be using. Let it develop. Like, look. So if you got in on the first one, you have to be lucky to know what's going to happen. For instance, you look at here. It had a nice indecision candle here on 3 minutes, right? You guys see it? That's where it popped from. That's where the smart money came in. Look how long it took for you to come back to another trade. So from 9:40 till 12:20, if you waited, you got it at 103, you get it to 105-ish on AMD. And if you add Orbs, you get more Confluence points. And you learn what works for you, especially if you log the trades into your journal and you review it at the end of the week or whatever, how often you review it. Mine are typically every day. When I look at it, I'm like, okay, if I had a bad trade, I will take a look at it and be like, okay, well, where did I mess up? Can I fix it? And is it a reoccurring pattern for me and my style of trading? If it is, then I look at it and I'm like, okay, I become a tester and I'm like, okay, well, I saw this, I didn't see this. And then I add it into my consideration box. Okay, well, next time I have to do that. That's why you log your trades. It gains confidence and also tells you where you're doing it wrong. Okay. What other questions you guys might have? I don't mind questions, guys. Please, I can stay and just ask questions.
So I have a question about retest. How do you determine the retest? I mean, are you looking at a time span of when it's gonna come back, or because sometimes a retest looks like consolidation as well, or?
It depends, right? So that's why, for instance, let's look at this PayPal level here. Okay, I'm just gonna go to 90 days, 1 hour for a moment. You see this from 92 to about 113. It played, right? So you have the responsive sellers that come in, and then we set up a base for responsive buyers, right? And there was also responsive buyers, responsive sellers that were acting here every time it hit. Responsive sellers, they find the value where they want to get out and they get out, okay? Initiative buyers burst the price through this level. They're coming in, they're like, yep, there's value in this stock, we're going to go higher. Well, when this burst through here, again, just simply there's people that did not get the orders filled, and they're going to wait and they're going to bring it back, and they're not going to move their bid till it comes back to this level and they're filled. And that's simply your supply and demand. They're going to wait, and when that hits, they're going to buy, and you can play a bounce at 175 to go higher. Because there's going to be other people with you jumping to go long here, and it's going to push the price higher in quantities. It's going to move the price, whether it's delta that's moving it or it's kind of like the underlying asset actually being bought up. But usually the options at this point will drive the price up. And this happens to be just Shorty's favorite pattern here that's being formed.
Cody, one last question on that AMD play that you guys were talking about a few days ago for June 17th. I think the calls were for 120, 130.
Yep.
But instead it went down. It still has a possibility. It's got a strong possibility of jumping back up there, right?
Yep, but I'm still in those.
Are you still in that?
Yep.
Okay, so should I wait until it hits 100 to jump back in, or I can jump in now?
So my first thought was that we were going to hit the 105s, and I started adding. Right, on long swings I averaged down because I did not go buy 100 pack on these when I started buying 120. I'll buy 5, 6, 10,
right,
depending on what your account is. That let's say I bought them. I know 120s. My first fill was 2.7 for June. Well, now if I know they're at 240, I'll buy another 5 pack, and I'll bring my average back down to let's say 255. Right. Then it hits 100 and they're at 2.3. I'll increase the size. I'll buy maybe 15, and now from 255 now I'm going to about 243. Okay. So now I'm averaging on something that I have time on, and let's say if it breaks 92, I'll be like, okay, well, I lost the money, I'm going to get out of this trade. It looks like it wants to go to 80, as that's the next level of support for AMD. And that would be my mental and how I look at the trade to go against me on the longer swings. I'm buying at the critical areas of support, and then I know that there's orders waiting here to be filled. I'll go jump in and I'll go heavier in this average down here, and if I see that it's working, and then I'll add a little bit more towards the 105 push. If I see a nice bounce here, I'll buy more and I'll kill that average down, but then as it moves up, it's going to be much more contracts that I'll help him in.
Right, according to the POCs.
Yep. And you
Yeah.
just play them. And of course, you just update these guys. Some of these are no longer epochs, right? I haven't gone back over the weekend and charted these.
Yeah.
Tonight, depending when I'm done with my family's dinner, we can definitely kind of jump on and do the watch list.
Awesome, bro.
But here, if you look at it, right, so we have a level here about 93-ish. If I
Yeah.
go on, man, why is it so slow?
Yeah, it's
So if
about
I
93-ish right now.
and it has an 80 level that's really, really important here. 82, yep. So 82 is fairly important. And if you look at the volume profile, I don't have it. I hate the volume profile. Let me just show you. So if I look at AMD here, so if I look at, I'm just going to hide all of it for a second besides VPVR. Just to show you, when it goes out of the picture like this, and you want to look at it, just look at it. So we had a nice head and shoulders that's been forming, and we saw it in the video too, right? And you guys see here, if you look at it a little bit zoomed in, let me see if this helps. Okay, so if you look at it right here, there's a volume shelf in this area that's being created, like right in this level, about 90.
Yep.
There's probably going to be buyers that are going to respect that level because they average down from this level and we popped. If it misses that level, there's a lot of support. And you guys saw based on here that 82, whatever level was, is the level where it popped from, 82 even. But here it's telling me right around 81.55, that there was a mini POC created. This right here would be called break-even area. So basically, you can expect a lot of buyers to come in here at 81 and drive it to 108. So that's about $29 or 20% that they would get on the shares. So this happens quick. If this level is defended, let's say tomorrow, you can get a nice bounce all the way to 105, 108 level. Probably would get out, if I have the 105s, let's say I would get out at 103-ish, 104 level here.
Yeah.
And I would keep a runner, let it go to the 105, and I'll cut it there on weeklies. On further out contracts, I can tell, if I go on the weekly time frame and I just delete a bunch of this crap. Again, what I can tell here is that this was the breakout level here. Let's see. I know that this here was the breakout level, and now we dipped below it. If I look at this volume shelf here, I'm just grabbing these 3 bars. Look at that. There's a strong chance that we're going to get a bounce here. And if we break below this level, which was about 91, then you have the next zone around 84 to 82. And I'm just looking at volume profile here.
Yeah.
And look at that. You break this, we have a nice area to play it. Whether you're buying shares, I'll be buying shares as well. If this breaks, then man, I will be definitely a buyer. And then the weekly volume is telling you something here as well. It is dipping down, but so is the volume. The shorts are getting exhausted on this one.
Yeah.
So for me personally, I know the company, is there a future for it for me to buy it and hold it 5-10 years? Probably, yeah, why not?
Yeah.
So that's how I look at it from shares, slightly different perspective when I trade options, especially weeklies, right? A lot of people lose money on the weeklies and 0DTs because they expect 200% returns. You guys know I take 10-20%.
Yep, that's me.
I take it instantly, guys. I don't wait for 100% on the 0DTs and weeklies. I do it 10 times at 10-20%, and I just did great.
So for those 130s, 125s that you bought, when would you get out on those?
Once it starts approaching about 115, 120s, I'll start scaling out.
Yep.
AMD has a full send too.
Yep. So if you look at it, where is it? Okay, here. How's he gonna bring it? No. Come on, maybe this one.
AMD is still happening.
Let's see. Okay, so here's the clouds. If I look at the clouds on this guy, and AMD is notorious for clouds. I mean, I'm telling you guys, I used to trade NVIDIA pretty much for a while till it started behaving differently, and I did no longer know the behavior of it. That's all I traded. So let me just hide this for a second. So here's your clouds. If I go, let me go on like 2 hours so that way you get more data. So here's your weekly top, monthly top. There's your daily top. And look right now where we are on AMD. I know it might seem like a lot, but it's, guys, it's only 3 clouds. It's right at the weekly bottom right here. Well, let me just show you something, how you look at this. I'll remove the monthly for now. I'll just leave the weekly so you guys see. Let me go on 4 hours. Okay. If you guys are new to the clouds, there's only 4 plays that you can play off of the clouds, but the weekly bottom is a crucial level for any stock. And they will ping pong between those bottoms. Look, boom, boom. Now, and I don't know how many sellers are left here, but the volume on selling is dying down. Like I'm seeing it as descending here from this sell-off, that they might be looking into a demand where the new buyers come in and push it higher. Usually when something is on a weekly bottom, monthly bottom, those tend to bounce nicely. And for instance, when the weekly bottom was touched here on May 21st, it exploded all the way to the top, came close, backdoor went up, bearish money shot went down, bullish backdoor, if you look at it here, went above, came back, and then pew, all the way to 164. So there's a high probability that we're going to defend this weekly bottom this week. Like super, super duper high probability that you're going to hold this level.
The weekly has a full send on it as well. Weekly candles.
Weekly candles? Okay, well, I wouldn't have it here, but let me see. AMV. Oh, yeah. And okay, so now that you have the weekly full send here and you're in a weekly bottom, I mean, I'll just let the history repeat itself. That's pretty much what I would do.
I'm pretty sure that means full send.
Yeah, that means we're going to go higher on this. Most people are still looking probably bearish on this, but yeah.
Will that confluence of the full send and the weekly bottom, will that be more prominent than the head and shoulder pattern that you showed before in your chart?
Yes. These clouds, and you can ask Catching Rockets, they will become, if you're trading shares in your rock, they become your bread and butter to grow your net worth. If you look, for instance, they're more powerful than anything you've probably seen so far. But like your monthly tops, your weekly bottoms, these levels they're not like, oh yeah, everybody sees them. Not many people have the levels that you're seeing on these. And I'm not saying this because we're using it, but these levels are so important. And a lot of algorithms have these built in on the bounces, on the rejections, and that's why we only play 4 plays off of it.
If you want to see how deadly they are, look at Amazon in 2008 on the monthly bottom. Like, I mean, you know this, Shorty, but that's the only time we've been anywhere near the monthly bottom, except for recently, was 2008, and that's when we had like we had a recession basically, and the housing market crash. And
yeah. So here's your monthly top tap right here at 37.19. The middle got rejected. You have a double bottom, and then if you add the rest of the clouds, and the more comfortable you get with the trading, the more you will realize what levels you need to add to your charts. And I'm not here to tell you like, hey, add these levels and it's going to be great. So most people will freak out, be like, man, I have so much on this chart, right? So let's see if I go to 1 day just so I can see clearly. So here's my daily bottom right here. You guys see it? Did it bounce? Literally, look where it bounced.
Right off the bottom of the bottom.
Right off the bottom of the 2.0 of the daily bottom. If this level was to break here, right, you're most likely going to go to that 2960 level, which is super, super duper important on Amazon. And I showed you guys multiple charts why it's important. So then if you break this level low here, do you guys see anything in here that they see in between 29 and 27? There's nothing.
Nothing.
So if I was to add VPR, for instance, so watch this. You break this, look how many skinny bellies you're getting. Belly, belly, and then you break here, 2906, you're going to that 28-ish, you're going to go to the weekly bottom. And this, I mean, this just repeats itself over and over and over and over. And here's your daily bottom on this. If you really want to short, let's say SPX, like swing short, 43.65 breaks, you have a chance to go to the 4,200 level. And I'm pretty sure we might be headed there. I'm on AMD now. Okay. And we'll hold more classes on these clouds and how you guys can use them, but just treat them as levels. Your weekly levels on these clouds are, I mean, they're money, guys. I don't know how else to not sound cocky or arrogant, but they're really, really important. Weekly tops, midline, and the cloud here are really, really important levels that you can use. And here's the weekly bottom. I mean, it just looks, what does it look like to you guys on a daily here? Does anyone see anything that I'm, you guys see this?
Starting to do a bear flag.
That's not starting, it's about to break it. And let's just be.
Yeah, you have red volume building up.
Out. Yeah.
Yep, it's getting ready to go.
So watch this. This is, what's this, 5.8% drop?
Weekly bottom. Oh, past it.
I'll probably go right here. This would be the target. Where would I get out on this break? I'll be out here. This is where I would get out. Or
That bottom
to this.
that candle over there to the left too.
This one here, yeah. This is a massive bullish candle.
I had a question about the clouds real quick.
Mm-hmm.
I was looking at SPY and the 4-hour cloud with extended hours on. The bottom is closed, but if you turn extended,
yeah, I keep.
Do you keep them on or off?
I keep them on, but
okay.
Yep, I keep them on. But 4-hour clouds is going to be slightly different between TOS on TradingView, just because the 4-hour candles are slightly calculated differently between the two systems.
Those clouds will get you hate on Twitter.
Yep.
Because you'll tell people, like, they'll be like, oh, XYZ stock's going through the moon, and you're like, nope, can't get above this level. And then it doesn't go above the level, and they don't understand why, and you're a cocky bastard all of a sudden.
Yep, I get that a lot. So
I do too.
I'm not trying to be arrogant, but with the tools that you have here, you should be processing it almost like a computer, so that way you're not looking at it like majority of the people. Because when majority of people start investing in crypto, what did crypto do? Crypto crashed. So yeah, this gives you a different perspective that not many people are able to see. And you guys know before, let me see what studies I have here. So what I would do, so if I did this, I would just load this 4 times. And for me personally, and you guys can do the same thing over there, which is what I did. I just changed these to be, my 4 hours. I changed this to be my dailies. And then I changed this to be my weeklies. And this gives you literally the best view that you can see of the space that they have on charts. So I have 4 daily, weekly, and these are my primaries. Now, if I go back up, my minimum has to be 4 hours, right? And these are all going to be the same color. Usually I color code it. And if you look here, it really does not get space. You guys see the little space or areas of space between here. It has between here and here, 96 and 99. It really starts getting space over 101.81 on AMD. So between here, you get this, and the next one is kind of like the mid here. And we can see which one this one is. So this is the daily mid. Then you have these levels. And if you just do this, literally, watch this. You will know where you want to take the trades. Do you want to take 116 to 121 with the cloud being in the middle? Probably not, right? I don't trade the clouds inside the clouds. But here you have a level. Once you break 121, yeah, I'll definitely take that $12 run right here, free run. And same can be done, and I've done this on Roku multiple times in my life where I look at the clouds. Let's see, I'll just remove all of this. And look at this. Once this is able to reclaim some critical levels, let's say it reclaims 123. If you recall earlier, we had 122 when we were charting Roku for a moment with VPOX. This becomes a crucial level and it has space all the way to 135. Then the next one would be kind of like the mid here. You have the 159, which gives you a lot of space to the 4 hour. I think this is weekly mid. Sorry, they're not color coded since I just created them. I usually have them color coded. And then here's your weekly top. And then break of this right here, you don't want to play in the cloud here in between. You have 283. So the best run is, you have them right here. 135, 159, 159 to 180, 180 to 204. Avoid this area right here because it's in the cloud. Then you break the 220s, you have 283. Let's see what this one is. This is the monthly mid, so you definitely want to mark that one. So this one, and then over 322, you have 412. So I'm just looking for the best spacing in between. And usually they work like a charm. And same can be said for SPY, SPX, or whatever you might be trading. So here's this. Look at the support that's coming up on SPY. Where's the most of the space? What's the easiest path that it can go right now? I'm just looking at a level. What's the easiest path of resistance right now?
Down.
Yeah, it's down. I mean, overhead up is insane. It has, of course, the trend bars. It has the daily mid here. It has, what is this here? It would be the weekly mid here, the weekly top. Then the monthly top is closed. I mean, honestly, for it to break 457, it would need a lot. And that's where it literally rejected perfectly on that retest here, and then it's going back down. So this level here is crucial, and this is my daily bottom. So you break 434.82 tomorrow, watch what it does. Welcome to 420s, and it will be fairly quick. That's a nutshell of the clouds. We have videos on the plays that you can play. For instance, the back.
Those scripts, they're not available, right? On
not the clouds itself, no.
Okay, so that Kelts thing is a separate thing. It's not in the resources.
No, it's not. Yeah. And then let's see how tonight my family dinner goes. I would love to do a watch list so that we can kind of identify some levels and reapply what we did today. So if it is, it'd probably be between 10, 11 p.m. Best case, maybe even 11 to 11:30 that I would jump on the watch list just because I have to go to my family.
Awesome. Thank you.
Yep. So any other questions? Were you guys able to pick up any knowledge, kind of use it? Try Monday, just use Orbs, nothing else but Orbs and Confluence points. Play it as it's telling you. You find 3 points to the upside, play it. 3 points to the downside, play it. And just see how you do and just kind of report back in the profits. Hey, I used this and I was red or green.
Thank you, sir.
Thank you, Jordan.
All righty, guys. Have a good day. And if you're celebrating, happy Easter.
Happy Easter to you.
All right. Thank you, guys. Bye-bye.